Hello, everyone. So welcome to another A1 stream. We're doing a bit of a different format. So we have decided to try to lengthen the stream a bit, to add more guests, add more segments, add more slots. Because I'm in Europe, in Croatia, I will be the first one to start. So on most days, I will be the first one to start. It is 6:30 Eastern Standard Time, or it is 12:30, I think, Paris time. Okay. So you're going to see everyone. There's going to be all of the guests. We have just added, I think, 3 segments before Nick. So usually Nick started the stream, and now it's going to be 3 segments before Nick. And the main goal is to spread out the stream as long as we can to basically deliver value to the viewers and also grow the channel, grow the viewership, and basically, yeah, be more present. So if you have any questions, put it in the comment section. I'm watching all of the comments. I have them on the side. If you want me to analyze any charts, put it on the side as well. If you want to get the new schedule, so you just need to go to A1 Trading and you need to click the live stream schedule. This is it. Okay. So you can see how before it was just from Nick to Tiger, and now we have added me, James, and Alan before Nick. So all of the information, everything is on the A1 Trading live stream schedule. Gold, 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 gold. Okay. So let's get started with gold. Absolutely. Gold. I actually had a position on silver, so I got stopped out of that. Barely got stopped out by like a point or 2 points. So I was betting that this is the bottom. I was betting on dollar weakness, which, if you don't know, the metals are paired with the dollar. So when the dollar loses value, silver and gold automatically gain value. That was the first bet. The bet was for the Fed to be more dovish. The bet was for inflation to go down, for the Strait of Hormuz to remain open, but the reaction was not there. So I got stopped out of this one. Now, if we just focus on gold for a minute, I would say there is a problem here. So for gold to go up, just first, let me see what about the comments. If you guys are bullish, type in buy. If you guys are bearish, type in sell in the comments just on gold. So if you're looking to buy gold, type in buy. If you're looking to sell gold, type in sell. And then I'm going to tell you what I think. I just want to get the sentiment. So today we have news. Do we have news? I don't think we have much news. Let's see. We have the CAD CPI, but I'm not trading the CAD at the moment. This week is kind of flat in terms of news. We don't have much. We don't have anything with the dollar. So we just have, let's say, the GBP CPI, which should be important for me because I'm looking for trades on the pound. We have the Aussie employment. We have the Euro ECB event. That could be important, yes. But next week is what we're actually looking for, which is the federal funds rate, FOMC statement, FOMC press conference. So that is the most important. That is the most important day for this month. Yeah, it's going to be the most important event for this month. Absolutely. We have the BOJ as well. That could be important because I'm betting on a bullish yen. So I'm betting on the yen to go up. So if they hike, that could be good. If they come out with forward guidance and say that they're going to hike even more in the future, that could be pretty good as well. Okay, let's see what else do we have. Hello from Miami. Hello, Daniel. Hello from Kosovo, my Balkan friend. Hello, Basha. Welcome to the stream. What happened with oil today? Crazy volatility to the downside this morning in Norway. Really? I mean, I saw Brent. Okay, it's filling the gap. So it's filling the gap. I did open my breaking news. I didn't find much. So if we go to breaking news, we go to market moving. There's not much news. I usually focus on the stuff that is highlighted in red. Okay, so the stuff that is highlighted in red is what I focus on. But I'm not seeing much here. You have some Houthi news. So those guys could close the other strait. So I think the Strait of Hormuz is currently closed, but there's another strait called the Bab al-El something. And if they close that one, it could be a problem. So that was negative, I would say, or bullish for oil. Other than that, I didn't see much. To be honest, I think oil prices go up. I think oil goes up because of this. So this is the Hormuz crossings, Strait of Hormuz, okay? And look at this. So pre-war, there were like 70 to 80 crossings per day. Then you had the war, the number went to 0. Then you had the strait reopening, you had 20 crossings per day. And what happened recently? So recently, the strait was closed again, and it went lower. Okay, so the number went lower, the number of crossings went to 3, which means strait is closed, US blockade is back, Iran is not letting ships pass through on the other side. Oil prices should continue grinding up. They could go back to 100. Absolutely, it could happen. Maybe not 112, but maybe 100. And that means inflation goes up. So if you have been following inflation, let me put up my edge finder here. So if you have been following the inflation print, the last print came in cooler, and it's all about inflation. Right now, it's all about oil. It's all about inflation. Everything that you're trading or anything that you're trading is basically connected to the price of oil and what inflation does. So inflation went up to 4.2, then it dropped to 3.5. Okay, it could go back up if the strait is closed. If oil goes up even more, this number could go back up. That's a problem. That means the Fed is actually going to have to hike interest rates. That is bearish for gold, by the way. So that's a bearish catalyst for gold. Right now, everyone is waiting to see what will happen. Will oil go up more? Will inflation go up, or will it continue going down? That's the question. That's why it's tough to get some positions in. It's tough to get some trades in. By the way, if you want to get the Edge Finder this month, there's a 45% sale. Okay, 45% off. The link is in the description of the stream, and you can use the code Marco to get 45% off the Edge Finder. So this is the biggest sale of the year. Definitely do take advantage, because I'm not sure when the next sale as big as this one will happen. And I want to remind you, if you do want to join the Discord, I will put the link to join the Discord right now in the comments. So let me just copy it from my file. Let's copy that. Comments. Okay. So in the comment section, you have the link to join our free Discord. Okay. And you can also become a paid member if you want to get all of my trades. It's not just me, it's Nick, Iwind, Chris Pulver, Alan, and me with all of our trades, all of our insights. I would say it's the best Discord in the space, absolutely, hands down. I've been in a lot of Discords, and this one is just the best. So you can join that, and yes, you can get a discount with the code Marco as well. So take advantage. Back to gold. We talked about gold, or we started with gold, so let's continue with that. Let's see. Okay, it's quite mixed. Buy, sell, buy, sell. Well, mostly sells. It's mixed. Hey, Marco, this is an unusual time to go live. Yeah, just check the schedule. Okay, we have a new schedule, new A1 Trading live stream schedule. It's on the website, so take a look at that. Sell, fundamentals lean for me for a sell. It's like 50-50. I'm looking at the comments right now. Like, we can count it. Let's count. For buys, 1, 2, 3, 4. I got lost. Wait. I need to be a bit more accurate. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 14 buy setups, or 14 comments for a buy setup. So buy is 14, and this is pretty important for us to get the sentiment. Okay, this is a pretty good gauge for sentiment. And now for sell setups, or people that are looking to sell. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's it's 50-50. So from the comments, it's 50-50. So completely flat. That is the worst option. So that means I can't get a read in terms of sentiment at all. Pretty funny. Look, what I would say, it comes down to what you think is happening to the markets right now. So it comes down to what you're thinking. Are you thinking that inflation goes up more? Are you expecting oil to go to, I don't know, 88? Or sorry, no, 100, right? Are you expecting inflation to go above 4.2%? If you are, that is bullish for the US dollar, and that is bearish for the price of gold. But if you're thinking that the strait opens soon because you have midterms coming up, because you have Trump who wants to stay popular, and he definitely does not want to see inflation go up. So if you're thinking that the strait opens pretty soon, that oil goes back to 70, that inflation starts creeping lower below 3%, so it just goes down, 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 and that the Fed flips dovish, which is bearish for the US dollar, all of that is very, very bullish for gold, then you need to look for buy setups. But those are the fundamentals. If we look at the chart, okay, if we look at the technical analysis, you have some key levels here. We are sitting at the 4K level. We are also sitting below the 200 EMA. In my personal opinion, this chart is nowhere. So this chart is kind of in no man's land. I think there's a very high chance we just continue doing this. Okay, I think there's a very, very high chance for that. What does that tell you? It tells you that there's not a lot of trades here. There's not a lot of opportunities at the moment. Let me see the Edge Finder. Top setups. Let's take a look. Gold. Okay, so gold is neutral with a score of 2. I mean, it's the same thing. So sentiment in the comments is 50-50. Middle East situation. I would say the Middle East is more skewed towards a higher inflation, higher oil. So I would say that is bearish for gold. Edge Finder, neutral. Chart, technical analysis, neutral. So you have 3 out of 4 indicators telling you that it's just flat. I would say there is better things to trade out there. My best advice would be to look at some other stuff. So maybe GBP/USD, maybe do something with the yen, maybe sell Swiss yen, maybe do something with USD JPY. Okay, maybe not USD JPY, that's pretty expensive in terms of swaps. Maybe do something with stocks. Most of it is flat right now, but there could be some opportunities out there. Personally, I wouldn't focus on gold right now. I think the edge is very small or non-existent at the moment. Things can change, absolutely, things can change. And when things do change, I'll be quick to pivot. But in my view, I already did have an attempt to buy silver or to buy gold. So gold and silver, there's a massive correlation. So basically, a bet on silver is pretty much a bet on gold. Okay, it's all about what has more volatility, what will move a little bit more, what will move a little bit less. Okay. Marco, what's your average monthly winning percentage? Well, we can take a look. Our WinX 0. Okay, so these are my stats. You can see for this year, I'm up 14.9%, and you can divide that by 7. So essentially, 14.9 divided by 7, maybe like 2% per month. I would say that is the average. So yeah, basically 2%, 2% per month, I would say. For this year, it does change from year to year. Some years are better, some years are worse. This year has been pretty good. Rabies says, Marco, or not Rabies, but Ray Beast. Marco, I'm having issues with DNA fund trade locker charts are stuck. I have the same issue. Yeah, I have opened my DNA and charts are stuck. I can't do much. I don't know anyone at DNA, so I don't have any connections. Just contact support. Okay, that's the only thing you can do. You can send an email to support. Yeah, I have the same issue. I have the same issue. The market is fractal, depends on the time frame you're looking at. Why did silver pump 2% compared to gold? Well, on the short time frame, there will be small discrepancies. So you can see, yes, today silver is up 1.76%, gold is up 0.1%. So you can say correlation is not there, but that's kind of short-term stuff. Long-term, if you get a break like this, trust me, you'll see the exact same break on silver. It may be more in percentage terms, but in terms of the move, it will be there. And you can see like the blue candle is not that big. This blue candle is not that big. So it's all about the price. Silver tends to have more volatility. The price of silver is 56.8. I think it's what, dollars per ounce or something like that. Gold is 4,000. Okay, so if gold produces a candle like this, it's only going to be what? Okay, 2.31%. But if silver produces a candle of that size, like this, it's going to be what? 6.9%. See? So the volatility in percentage terms is much, much greater in silver, which means you can lock up less capital, more volatility, smaller position size, and you get more bang for your buck, you can say. Fed holding end of July is basically a cut. Let me see, Fed watch tool. Have the probabilities changed at all? Let's take a look. They're kind of the same. If anything, it moved a little bit away from 2 hikes to 1 hike. But still hawkish. To be honest, right now, as far as my personal trading goes, I'm kind of stuck. I am not exactly sure where I want to pivot. Do I want to stay short on the dollar, which I'm currently doing, or do I want to flip and buy the dollar? Because the Strait of Hormuz is closed again, because inflation is actually expected to go up. I mean, just logical sense tells you that inflation, the CPI, will go above 4.2% again, which means the Fed is going to have to be hawkish, which means the Fed is going to have to hike. So that's what I'm thinking about. I'm not exactly sure. Should I flip bullish on the dollar? Personally, I don't have enough evidence just yet. I still have this week to pivot, So that's what I'm thinking. I don't want to go heavy. I don't want to go heavy with exposure. I don't want to take a bunch of positions. Let me just move the camera a bit. No, like this. Or like this. Is this a bit better? Yeah. So yeah, I don't want to go heavy with positions. I definitely don't want to go heavy. I need to make a decision, but I need more data. I need more evidence. I need more research. I need to see what will happen this week. Okay. Let's see. For Hormuz Strait to be open, the Trump would need to capitulate, which is more of a threat to his presidency than the midterms. Yeah, it's a balance. It's a balance. I think the recent escalation does tell you that Trump is more willing to close the strait than to focus on the midterms. So personally, I was wrong. I thought he was just going to stay flat and try to de-escalate as much as he can until the midterms happen, but looks like he did escalate. More attacks are coming. Strait is closed. It may be a good time to pivot. If I'm early to that idea, if I buy the US dollar, it may be a good time to pivot, to basically buy the dollar. I'm just not sure exactly which pair I would do. Euro dollar, possibly. That's something for me to think about as well. I really don't want to touch GU. The British pound has been pretty strong lately. AU could happen. NZD USD could be interesting as well. Let's just move it here. So NZD USD could be interesting to go short. Yeah. But if we do get an escalation, the RBNZ has been pretty hawkish, which is kind of concerning. So that's something to think about. I don't really have a clear pair with the US dollar. Let's jump onto the top setups. Do we have anything? So do we have USD? Okay. We don't have anything that is telling me to buy the dollar against. USD Swiss, USD CAD, NZD USD. Wait. So, okay, NZD USD very bullish. Yeah. I'm gonna have to wait a bit. Did the schedule change? The new schedule is on the website. Okay, so open the website, A1 Trading's live stream schedule. New schedule is here. The only change is we have added more slots before Nick. So usually Nick started the stream. Now I'm starting the stream. You have James coming on after me. Then you have Alan, and then it's going to be Nick. And then it's going to be the same. So essentially, James, Alan, and me, we are doing 2 segments per day. That's the new change. Aim is try to stream as long as possible. Trying to catch more folks in different locations, absolutely. So I'm trying to catch the people in London, the people in Europe, and then later on we're trying to catch the people in New York, US, Asia, a bit later than that, I think. GPUSD, okay, sure. Could you argue that gold is forming a falling wedge? I don't want to do a lot of technical analysis, if I'm being honest. I would just say there's a key level. So if you look at the gold, there is a key level of support. Okay, key level of support right here. So let's put the support. And if it breaks, that's fine. If it breaks, it's going to be very bearish. But right now, we are stuck at the 4K level. The price just doesn't want to go up. It doesn't want to go down. It keeps on bouncing off of the 4K, and it's keeping below the 200. I would say it's no man's land. I would say it's a big sort of red flag, and forcing trades or taking too much is problematic in this area. That's what I personally think. US is still burning SPR, strategic petroleum reserve. Yeah, that's something to think about as well. So the reserves are limited. They cannot really burn through all of them. That's definitely an issue. And it's not just the US. I think it's pretty much everyone in the world that's burning those reserves. But that's something I also need to research. Look at the gold. What do you think about CAD yen? I just want to say, if you want to join a free Discord, A1 Trading free Discord, I will post the link right now. Okay. So let me copy it from my file. Let me paste it in the comments. So in the comment section, you have the link to join. Let's just highlight that. To join the free Discord chat. If you want to join the premium section, you can do so as well. And you can use the code Marco. Okay, the code is Marco. And I think it gets you 25% off. Okay, so you get a pretty good discount there. You get all of my trade ideas, all of my knowledge, and it's not just me. It is Nick, Chris Palmer, Iwind, Alan, me, and a bunch of profitable traders. Best Discord in the space, I would say. So the other members, they're not like trading ICT, stupid stuff, SMC, losing money every day. They're actual traders that are making money in the markets, and they have they have a lot of funding, and they have pretty good accounts. So it's real traders. That's exactly what you need to learn this game, right? You need to surround yourself with profitable traders, with the real deal, if you want to learn. So getting back to the charts. For me, I have GBPUSD on the watch list. See, my watch list is usually, it's always on the top right there. I have two things on there. I have GBPUSD. I was looking for buy setups. I definitely was. But this recent news with the Strait, this recent escalation in the Middle East is telling me something is wrong. And this is from Brent Donnelly. So the title of his recent newsletter is Something is Wrong. Hormuz crossings are back to zero. This is the exact thing that led the price of oil to explode the last time. Okay? So Hormuz being closed is the exact thing that caused this, which is telling me it is highly likely that oil could go to 100. It's already going there. So it's already on an uptrend. I could buy oil, which is actually not a bad idea to buy oil. Let me see. US oil. Okay, neutral on the edge finder, but just as a play on the Middle East, I could do it, although I think my edge is pretty small. The next best thing is to buy the US dollar, which means I don't really want to buy GU, because buying GU is a bet against the dollar. So I'm going to have to probably remove it from the list. And let's do it now. Yeah. Swiss yen is right now the only good thing that I can see. Swiss yen, basically, it's a bet on the yen. It's a bet on the yen that the yen gains value. The recent news out of Japan was that the Japanese government has kind of told, but actually ordered the Japanese pension funds to move out of foreign assets and go into domestic. That basically means that the pension funds, which have more than $1 billion US or $1 trillion, something crazy number, so they have a bunch of dollars under management, they will sell US bonds and buy Japanese bonds. So sell foreign and buy domestic. The effect is a bearish dollar and a bullish yen. That's the trade idea. The last time something similar happened, but opposite, where the pension funds sold domestic and bought foreign assets, was in 2014, end of 2014. Let me show you. So the 4th of October, and it made the dollar massively gain value against the yen. So I'm betting that the opposite thing happens now. I'm betting that this happens. Okay. Now, the reason I don't want to sell USD/JPY, because I can get stuck in this position for weeks or months, and paying these negative swaps would completely ruin the edge. So Swiss yen is the next best thing. Selling Swiss yen is the next best thing. Now I know you're going to say this chart never goes down, and you would be correct. But I'm not looking for a huge downtrend. I'm looking for maybe a correction like this one. So I'm looking for a move to maybe, I don't know, 188 would be nice. 190 would be good as well. 190, yeah, sure. So let's just structure a trade idea. And then I'm going to pass the stream to James because I can see him in the background. He is the next guest. So sell Swiss yen, stop loss above 202, let's say above 203, aiming just above 190. This is a pretty good trade. So this is a nice one. This gives you alpha without the beta. So it gives you alpha because of Japan, but the beta is low because it's not really connected with the Middle East. It's a pure play on Japan. So that's a trade idea right there. If I decide to take this, you will be notified in the A1 Discord. The link to join the Discord is in the description. And I want to remind you, code Marco gets you a nice discount to join the premium Discord. Thank you very much for watching. This is a new schedule. Yes, you can find the exact schedule on the A1 website. Do not go anywhere because you have James coming on in 30 seconds. I wish you guys all the best, and I will see you tomorrow. No, actually, sorry. I will see you in 3 hours because I'm streaming 2 times per day. So yeah, that's it. Next guest is coming up.
Hello, ladies and gentlemen. How's everyone doing? Happy Monday. What a treat for you guys and me, of course. Back to the 1 hour segments. So any of the OG viewers will remember that I used to come on for an hour every now and again. And then obviously we reduced that down to half an hour. But now I am back to my original 1 hour time frames, which is cool. I love being here, so that's great. And then I'll be on later. I think I'm doing a cross segment with Alan, which is really interesting. I've never done one with Alan before, but Alan's a fantastic guy, so I'm looking forward to that as well. What a good Monday we're in for. How was your weekend, guys? Hope everyone's doing well. So before we go over trade ideas for the week ahead, or this week, I should say, my favorite 007. Yeah, I wish. Not nearly as much swagger as Mr. Bond, but there we go. Close enough, right? So pound dollar, we discussed this one last week. I think it was Thursday or Friday. I told you guys I was going into pound dollar longs. Decided to get in. I'm not sure. I can't remember exactly when I told you and what I did tell you. But either way, I'm in a long position on pound dollar now, which is really nice. So it's the bread and butter setup. You know, it's what I'm always harping on about. Fib from the low to the high, pull back, break and retest also in the previous structure into the fib zone and looking for that continuation. And then actually, I do need to review. I've not checked the Edge Finder today, but last week pound dollar was bullish, so I'm hoping it's still there. It is. So we have full technical alignment. We also have full fundamental alignment. So overall, it's looking fantastic. However, it's not all sunshine and rainbows because we've got pound Aussie that is not looking so great. This was one of those trades where, you know, when you jump in and it's looking fantastic, we had really strong momentum to the upside, and then we came into this level of resistance and very quickly rejected. Now, this is fully my own fault, obviously, you know, that's how trading works. But one of the things is we were looking at pound Aussie on this stream, I think earlier last week, maybe Monday or Tuesday, maybe even the week before. And we had people, I need my indicators back. We had some people asking about this market, and I was saying I didn't really like it. And that was true when I entered, but my setup was still there. So I did decide to take it anyway. But we've double topped on this daily time frame here, and we've still got this 200 daily moving average, kind of acting as a dynamic resistance, or, you know, however you want to look at it, whether it's just a sentiment indicator, trend indicator, whatever. But it is still there. We've got this really strong daily downtrend as well, and this is a negative swap position. So short sellers get paid, long buyers have to pay swaps. So it's definitely not favorable, so I'm very likely to cut this one. I think I said this last week, actually. I said I was going to cut it after the stream, but I did see rejections here. I was like, okay, I'll give it one more chance. But yeah, it's just not following through. So I'm going to cut that one later today. And lastly, euro pound shorts. This one's looking really good. So it's not ideal. You know, I really wanted to see a larger pullback. I wanted to see a retest of this previous high time frame support, but we didn't get that. We did get 50% retracement within this downtrend. We saw rejection. So I was like, you know what? We'll jump in. The fundamentals are there. The trend is there. Technically speaking, it's a valid trade, but you know, not ideal in terms of the pullback distance, but there you go. And it's working out, so it's all good. James Cross Allen would be great. Indeed, I agree, Max. It'll be interesting. It should be a fun segment, so we'll see what happens there. Although Allen might run a rings around me on an economic basis, I'm fairly sure he's much more intelligent on that side of things. But we'll have fun. James 006, what are your thoughts on Pound New Zealand? 006 is a good one. We could settle there. Okay, Pound New Zealand, interesting. Also, the good thing is I can actually take more time with my trade ideas. Now we've got the 1 hour segments. Previously, on the half an hour ones, I had to kind of speed run through. I couldn't give you guys that much information just because of obviously time constraints, but now I can. So the pound is doing really well, actually. Hold on, let me just pull up the Edge Finder real quick. Just see what we're getting here before we continue so I can base my directional bias. Are we even getting Pound New Zealand here? It doesn't look like it, unless I missed it. Let's see. Pound New Zealand, -1. Interesting. Okay. So that's a little bit tricky because I thought this might have been a little bit more of a bullish market, but it's not. So I know the RBNZ is slightly more hawkish. The sterling is doing quite well on optimism. We've been talking about the optimistic trade on the pound quite a lot recently, so I'm not going to go into that one unless anyone wants me to specifically. However, if we've got a neutral reading on the Edge Finder, the H4 time frame here is bearish. I think the only way I could really approach this, first of all, is staying away, which is what I'm going to do. I'm not actually looking to take this trade, but the easiest path, I would say, other than staying away, would be looking to go short. And the only reason for that idea would be to follow this H4 trend. On the daily, I wouldn't really want to trade just because we are coming into this 200 moving average. And again, the fundamentals are basically null. So in terms of directional drivers, I just don't think there's much here. So again, I think short term maybe a trend followed to the downside, but even long term actually might be a trend followed to the upside. We've got bullish trend on the daily time frame. So unfortunately, there's not a huge deal for me to pay attention to on this one. Please recap for latecomers. Don't worry, I've only been on for 7 minutes, so there's nothing for me to recap. In terms of Marco's segment, I can't do that because I don't want to speak for him. I'm not sure exactly what he said, but yeah. As Jordan said, there is a rewind feature. I know it's a really obscure thing to possibly fathom, but you can rewind the stream if you want to. Do you go live every Monday? Yes, starting now I am. So yeah, every week we now have a much more set schedule. So previously we had a bit more of a sporadic schedule. You know, it was kind of cohesive. You know. Sort of patterns in the schedule, but overall it was a little bit more messy, whereas now it's a lot more understandable. So I think Marco starts the streams every day, then it's followed by me and Marco Marco does half an hour, then I do an hour after Marco. It's basically the same schedule every day. So yes, I am live every day, and then on some days I'll be on again later in the day. So yeah, cool stuff. Anyway, what were we doing? A recap. So let's go over gold. Guys, gold is an interesting one right now because I am actually buying gold, take it up, believe it or not. So when I say I'm buying gold, I want to be very clear. I'm not buying on a short-term basis. I'm not swing trading gold like this. You know, I don't have a stop loss in place. It's a very long-term DCA. So on the 100K account, it's got 0.01 lots, just to give you a frame of reference on size and long-term. So this isn't something I would advocate for anyone to do. It's not a financial advice or anything like that. But obviously, you know, I want to tell you guys what I'm doing and keep you informed. So with gold, what we are seeing is this really nice daily and weekly level of support that's been held, along with this 4,000 key level. Now, 4,000, I would say, is a very large, not just key level, but also a psychological round number. It's a very nice level within gold. And the fact that we've been rejecting this area, to me, is quite a nice technical indicator. So there is that aspect. There's also the idea that I've been talking about for the past couple of weeks, on gold, which is this pullback here. So, you know, we had a lot of doom and gloom on gold, especially on like the H4 and the daily timeframes. It looked horrible. You know, this looks like a very detrimental downtrend. And obviously, you know, there was the crash, technically speaking, as well. Gold on the daily had the, you know, death cross, golden cross, whatever people like to call it, with the moving averages crossing to the downside. So there was all those things. Now, obviously, we had the stronger dollar. We had higher inflation expectations. We had central banks pivoting towards being more hawkish. So overall, gold was in a really bad situation. It was like, okay, there is literally nothing to support gold. The only thing that people were bringing up was central bank buying. And I think Nick addressed this really well. That's not something to trade off. It's something you could put in your trade thesis just as a small little cherry on the cake, if you will, but it's not enough to drive a short-term speculative trade. But the weekly time frame is looking beautiful. Now, of course, Fibonacci's, the technicals are really subjective, but so it really depends where you draw it. But if we take this sort of minor low here on the weekly, we are currently in a 50% retracement, give or take, maybe a little bit less. But we are within this fib zone, which is quite interesting. But then if we actually make it even more simple here, multi-year rally to the upside. At this point, we were extremely overbought on the RSI. We were very deviated from our 200 daily moving average. So a mean reversion or a pullback was really expected. It was one of the, it's a healthy move. Do you know what I'm saying? So again, even though on the day, on the H4 and the daily, it looked horrible and it was really bad to be a buyer. If we zoom out, this actually looks really good. You know, just a pullback. Nothing more than that. Of course, I could be wrong. Gold could come, could theoretically plummet down to 1,000, but I don't think it will. So there is this aspect that higher time frame wise, it still looks really nice. And then seasonality isn't something I use that much, but I'm not sure which one to use, whether it's annual or monthly. Let me just double check before. I think annual is the one I want to pay attention to. Gold here. So yeah, so we are heading into quite a nice bullish seasonal period. So the 10 years here, I've been paying attention to the 5, 10, and 15 year, which all pretty much turned bullish within anywhere from late July to August period. We do end up with quite bullish historical price action on gold. Now, it doesn't mean that much. Obviously, gold is a very bullish asset inherently, but it is, again, one of those things we can put in the checkbox. And then we pair that with the weaker US dollar. Keep in mind, the US dollar previously was getting a 100% bullish score on the edge finder. Now it's down to 40. So it's lost 60% of its score within the past 2.5, 3 weeks. So there are all these things that I think are really starting to stack up for gold, not on like face value. I think these are things you kind of have to take a little bit more of a discretional view with and a little bit more of a risk-taking perspective. But I definitely think there's an argument for being a buyer with gold, which is exactly what I'm doing. Again, longer term, definitely not a short-term idea. I truly appreciate the live streams and videos from the A1 team and friends. I've learned so much from you guys. Keep up the good work. That's fantastic. That's why we're here, is to give you guys some value, entertainment, and to keep me busy, because my days are pretty boring sometimes. It's just a cherry on top. That's exactly it. Yeah. Oh, Kwang, hello. I'm good, doing good, my friend. How are you? Oh, my camera's dead. Hold on. I'll try and bring that back in a second. I will be interested in your view on EU, James. I'm short as of this week. For me, DXY held that support. Okay, we'll have a look at EU and then we'll move on to the Dow as Samuel has requested. Just give me 1 second. Let me try and fix my camera before we continue. Don't want to go through this with a blurry face. I think my thing crashed, my software. There we go. We should be back. Okay, all good. All good. We can continue. Jeremy, good to see you, my friend. Hope you're well. Okay, so what were we doing? It was EU, Euro, US dollar. The problem is with Euro dollar is I just don't see that much for it at the moment. Oops, that's not what I want. Top setups. I'm fairly sure Euro dollar was bullish at one point. Let's just see. Is it still there? Yeah, so fundamentally, it is very bullish. Let's take a quick zoom in on the scorecard here. So we've got a score of 8. So technicals are bullish. Sentiment across the board, so COT and retail are neutral. However, COT week on week change or weekly change is bullish. So that means essentially, to keep it simplified, institutions added more positions to euro longs than dollar shorts, or reduced their euro shorts compared to dollar longs, if that made sense. So either way, it's a bullish change for euro dollar. Economic growth is bullish. We've got GDP versus forecast is the only really bearish thing here. The PMIs are bullish, retail sales is flat, and consumer confidence is bullish. Jobs market is completely neutral. We've got obviously 2 bullish readings, 2 bearish, and 1 neutral. Inflation data is bullish. We've got CPI year on year is bullish, and interest rates here are bullish as well. So the issue is I can't see anything here to warrant a short position. Now, on the Edge Finder score over time, this is something I really like to pay attention to, but I don't really see anyone talking about, to be honest. But this is something that I like to use as a bit of an indicator for whether something is worth trading or not. So, of course, we can pay attention to the score. But what we see is Eurodollar was pressured for quite some time. Obviously, this was on the back of the very strong dollar we had. Then we saw the score starting to flip back towards neutral and then hover around neutral and then climb its way back towards being bullish and being bullish right now. So this tells me it's a bit more of a longer term and sustained score, not just a one-time flip. You know, if we had something like really poor NFP, that could flip, you know, obviously depending on what the score was beforehand. But this just tells me it's a bit more of a sustained move or a sustained score. So there is that side of the fundamentals that I just don't see really warrant a short position. However, I was looking at Eurodollar over the weekend, and something I noticed was the technical side that doesn't look very good right here. So we've got the previous daily lows that are now acting as support. Now acting as resistance. We've got the bearish trend here on the daily. So this puts me in one of those situations that we've been speaking about last week, where the fundamentals are telling me one thing, the technicals are telling me another thing. So fundamentals are bullish, technicals are bearish. I can't do anything here. Now, on a sort of cyclical basis, I'm not sure if that's the right way of explaining that. The historical pattern on Eurodollar does also signal bearishness or potential further moves to the downside. So Eurodollar follows this trend line to the downside. Now, it doesn't matter if you trade trend lines or not. You know, this is one of those things. We've got these lower highs that get printed on the higher time frames, monthly or weekly. Every time we print one of these highs, we end up having quite a significant move to the downside. Now, it's only happened twice, but again, this is a really long-term view. So this was since basically 2018, give or take. We've done this again. Are we now in for sort of a correction back down towards, let's just say towards parity, just to keep it simple? That's definitely an option. But then if we look at actually, let me zoom in. If we look here, we are still in this bullish trend here on the weekly. So I don't think there's much of an edge. I like I said, I think the technicals are going one way, the fundamentals are going another way. I think if you're more of a technical trader, short positions do make more sense. But if you're like me and you pay more attention to the fundamentals and technicals are more of just a confirmation, then there isn't really anything to do at this point. So yeah, that's my view on Eurodollar. I know that's not really maybe what you wanted to hear, but you know, I always say it as I see it. In this case, I just don't see much. While the schedule will cover most of my sound day. Yes, indeed. Yeah, it's a busy schedule, but it's all good. What do I think about A1 trading with German content? Would love to see you guys. Oh, I would love to work with you guys. Maybe we can speak. Okay. The problem is I am not on the A1 team. I am obviously part of the stream, but I'm not involved in their business operations, their hiring, their schedules. That's none of my business. You would have to contact Nick or someone on the team for that. The problem is with other languages, it can become quite difficult. I've tried to work in different languages, but in terms of, I'm going to be honest, obviously as content creators, one of the main priorities is views and retention and sales and those types of things. When you're doing different languages, you really cut off a large portion of potential. Whereas, you know, a lot of countries speak English. I know that might sound very ignorant on my part, but it is true. So English normally is the focus. But again, there might be an opportunity there for you. So I would say get in contact. I don't know. We won't be seeing clear directions till conflict. Inflation straight off moves. AI is out, which we won't see anytime soon. I don't know. I'm not sure I agree with that, really. I think the situation with Iran is very boring right now. And I think the markets are seeing it the same way. It's very much a case of, actually, you know, a good example of this is the Russia-Ukraine situation. So back in 2022 with gold, let me find it. Where was it? 2024, 22. I think fairly sure it was here. It was around the same time, actually. It was the start of the year. I'm fairly sure this was the move. I could get my dates wrong, but I'm fairly sure this was it. So we had the initial move, and this is more just for example purposes, not a literal one-to-one, but it's the way the markets operate overall. It's like we have something in the markets that move, you know, a war, a pandemic, whatever it may be. The markets priced in relatively quickly, of course, depending on the severity, and the markets will move and react. But then it becomes essentially just a boring topic. The markets price it in. Everyone knows about it. There's no edge in that. It's not a new thing. and then the markets tend to normalize or move on to the next big thing. So we had the Iran situation, and then oil continued to collapse, or at least revert back towards its pre-war prices. And then what was the next big thing? Well, the big thing was dollar bullishness. Everyone was going long on the dollar. And right now, I don't think there is really that much of a focus. I think maybe pound strength, sterling strength is probably one of the big focuses right now. But overall, you see what I'm saying? We had the bullish run. And even though this Russia-Ukraine war is still going on today, I'm still seeing headlines about it. But what's gold done in reaction to that? Well, it just continued. It normalized, essentially. So I think it's kind of the same thing with the Iran situation. Like, okay, well, it's happened. We all know about it. The markets have priced it in. What else is there? We know the Straits of Hormuz isn't open. Excuse me. So, yeah, again, it's just the way the markets work. I think until we get either a complete de-escalation or a massive escalation, it's not going to be a big deal. Why live so early? Because we're trying to just become a bit more inclusive, I suppose. More inclusive for everyone to be able to tune in and have the opportunity to pay attention to the guests. No, I'm kind of joking. We just had a move around of the schedule. I'm saying we. A1 had a move around of the schedule. So if we look here, the new schedules are pretty much the same every day going forwards. So Marco starts, I take over for an hour, then we've got Alan, then it's Nick, and then Alan with someone. I think Alan always has a slot with someone else after Nick, and then Marco, and then after that it kind of varies a little bit on who's coming on, but yeah, we've changed up the schedule. So we now start earlier, and I think we might end later. I'm not sure, I didn't check that, but yeah, we've got longer streams now, essentially, to answer your question. So let's have a look at some more markets. What can we look at this week? CAD yen is looking good. What else do we have? Pound dollar, I'm already in. FTSE I don't really like. Pound Swiss, euro dollar, euro. Okay, so we'll look at CAD yen, then we'll move to dollar CAD, which is getting a bearish reading. Thank you for the answer, no problem. So CAD yen is looking pretty good to be buyers. I was looking at this one over the weekend. It's on my watch list, but there's nothing for me to do just yet. So we've got the fundamentals that are bullish. All I'm waiting for really is a pullback. So of course, fib from the low to the high, waiting for a pullback into, well, either the 50% or the 61.8%. I'd prefer the 61.8% level. And that's just because it lines up with the previous left side structure here a little bit more than the 50% does. So I'd like to see a reversion or a pullback towards this level, meet the 200 and the 100 moving averages, and then some sort of bounce. Now, that might not happen. We are seeing very strong movements to the upside within the yen pairs, specifically CAD yen, pound yen, I think Swiss yen as well. Actually, maybe not Swiss yen. I think dollar yen and Swiss yen are kind of flat right now. But yeah, we are seeing obviously strong momentum in these markets. So whether we get this pullback or not really depends. So I'm not going to chase it. If we get it, cool, I'll go long. If not, fine, I'll just have to sit out. Now, pound yen is also looking interesting. So I was looking at this one as well. It's also on the watch list. Because I've missed two entries on pound yen. I missed one down here and I missed another one here. So I was looking at this one to see, can I get in on this pullback here? The problem is now, I don't think pound yen is really that bullish. Oh, actually, sorry, I'm telling you a lie. I just didn't see it at the very top. My eyes skimmed over. So pound yen is very bullish with a score of 7. However, it's lost 1 point here. So I think there is better opportunities really in other markets rather than pound yen. I wouldn't say it's a bad position to take. I would still jump in if we saw a little bit of a pullback towards my entry again. But yeah, we'll see. New Zealand US dollar, kind of the same thing. I would look for a pullback towards 61.8% retracement, retest the previous highs here. Also a pullback towards previous support, break, retest, continuation type pattern. Always the same thing with my strategy. Euro dollar, we've already looked at euro dollar. I really don't think there's much here for me to pay attention to. It's more a case of just having to wait for either a bullish trend to establish or for the fundamentals to flip bearish and line up with the trend. So that's a quick fire run through those. But then dollar CAD is a little bit more of an interesting one. So if we look at the edge finder, dollar CAD is very bearish with a score of -7. So overall, we want to be short sellers, which is fine. The H4 looks good. We've broken below the 200 moving average. Overall, we are moving to the downside, creating this sort of bearish structure. So looking for a pullback towards the 50% retracement, again, into previous structure on the left, and a continuation to the downside makes sense. This looks like a very simple trade. The problem is when you zoom out to the daily time frame, it actually looks really bullish. So we've got the previous highs here. And again, this would also be a break and retest type pattern. So we've got this sort of idea that actually we could see quite a large rejection at this point. We've also got the bullish trend here on the daily time frame, and the RSI is really oversold. So I'm now wondering, if I go short on the pullback, am I going to be able to just get like a 1-to-1 and have to cut the trade here? I don't know, but I really don't like the idea of selling into this level. It just seems really risky. So I think I'm going to sit out of dollar CAD and just let this one go, because although, again, the H4 looks decent, I'm not comfortable with this trade whatsoever. So I think I'm going to stay in my pound dollar position. I'm going to cut pound Aussie after the stream. I'm going to stay in euro pound shorts as well. I'm fairly sure euro pound's actually dropped off the edge finder, which is a little bit annoying. Yeah, it has. So it's not getting a bearish reading anymore. So I'm going to get rid of euro pound. Sorry, not get rid of euro pound. I'm going to trail the stops on euro pound because it's disappeared off the edge finder. And just let that one run. If it stops me out, fine. That's no problem. Moving forwards, I don't think there's much else on my radar. So as I said, I am long. Actually, I need to add this to my thing here. So I am long gold, but very cautiously on a long-term basis. So we can take a look at the dollar. Hold on, I got a cup of tea here. I don't want it to go cold. Never mind, it's a bit late for that. It is quite cold. Anyway, so the dollar is also actually looking quite interesting. I think we're at a little bit of a crossroads on the dollar at the minute. So something we've been looking at, I think, most traders have, most content creators. I'm sure you've seen it on my channel or Nick's channel or whoever you watch. I'm sure you've probably seen this around, this trend line here. Every time we come down, we have, this bullish run. I think most of us should be aware of this sort of pattern that we see within the dollar now. Now, of course, through sort of 25 and 26, we did see the dollar come back down to this level, this trend line. Since that point, we have seen, obviously, this run to the upside. Now, I do still think we have further room to come to the upside in the dollar. I'm not necessarily bearish long term. I do still think there is very good probability that the dollar will continue to run at some point. The problem is, obviously, as I said earlier, the dollar's fundamentals right now are looking very, very bleak. So actually what we can do, let's see what the CME FedWatch tool has got for us. Yeah, so here, what we can see, 1 month ago, we had a 38.5% probability of a hike. That increased to 41.7, and now it's dropped to 12.8 and is now hanging at 14. So the idea of a rate hike for the next meeting is dropped considerably. So that the sort of dollar strength we had when the markets were pricing in the hawkish Fed, the good data, sticky inflation, it's not really there anymore. We had cooler inflation. We had a weaker labor data print with NFP. We've had worse PMIs coming out. So is the argument still there for the dollar to continue running? I really don't think so. I think really what we need to see is a new catalyst. I think at the moment the dollar is bearish, but I don't think people want to sell the dollar. And I think a partial reason of that, or a large reason, is because yes, we had cooler CPI, but I think the markets are expecting CPI to come back to the upside and start heating up. Well, maybe not heating up, but at least stay sticky, if not heat up. And the reason for that is because of the Strait of Hormuz. So we had obviously the Strait open again, but it closed, and the oil reserves aren't able to last that much longer. So energy prices are going to increase, I would expect. I think, yeah, we are likely to see higher inflation. So I think when we start seeing inflation prints picking back to the upside, that will be a catalyst for the dollar to pick back up, start being bullish, and possibly pricing in Fed hikes again. So that's sort of the idea, but for now, that's not the case. So obviously, as traders, we trade what we see. So yeah. US dollar CAD, we did dollar CAD actually probably 2 minutes before you asked that question. So feel free to rewind and you'll see my dollar CAD breakdown. Gold have impacted on core CPI, CAD not, sir? I'm not sure what you mean by that. Gold impacted on core. Yeah, gold was impacted. So yeah, overall, the current landscape is actually, I would argue, quite bullish for the dollar. Not significantly, not enough to warrant me taking any aggressive positions, but I would say it's a bit more favorable at the moment. Yes. I think markets are waiting to see if Bab el Mandeb gets closed by the Houthis. Yeah, I think there's a lot of question marks at the moment in the markets. Well, yeah, I think traders and investors have a lot of questions and concerns about what's going to happen next. But I think that more goes towards an institutional view. I think as retail traders, that's not a huge concern we need to have, because it's not a case of it doesn't matter for us, but it's largely because we are much more nimble. So we as retailers, we obviously don't have compliance. We don't have risk departments. We don't have clients. We don't have all these things to deal with. So we can close a position within 2 seconds if we need to. So if those things do escalate, as long as you're aware of what's going on, you can get out of the position. So those things, to me personally, really don't matter. If it happens, it happens. I'll react to it. But at the moment, that it's not a factor. You know what I'm saying? That's just my point of view. I'm sure there are other retail traders that will disagree, but again, that's just the way I trade. So if those things happen, fine. If the dollar catches a bid on risk escalation, I'll close my pound dollar long. It is what it is. So yeah, that's my point of view, but we'll see. Okay, so it's been a while since I've done a 1 hour stream. I can't remember how I used to fill them. I think we just used to yap. I think there was a lot of yapping in my old streams. So we'll see. We'll see where the next half an hour takes us. Okay. Oh, you know what we need to look at is COT data. I completely forgot to do that. So it is Monday, so we'll have a new print. I'm not sure if Marco will have done that with you earlier, but I'll go over it now because I've not done it myself. So the Nikkei saw inflows, which is actually quite interesting. So the Nikkei was something I was in not too long ago, and I ended up closing. Did I close it? Yeah, I closed it, I think, break even, if I remember correctly. Actually, it's looking good. Maybe the Nikkei is one to watch. The downside is obviously the edge finder isn't reading the Nikkei as bullish, but with the COT report, that might be enough just to get me in. And the reason that I wouldn't mind getting on the Nikkei without the edge finder reading is just because I love the Nikkei. So if we look at the way the Nikkei behaves, obviously it just trends to the upside, generally speaking. But not just that, it's also a case of these pullbacks do get eaten up very quickly and bought into. And if you can get in on a pullback, you are very likely to be subjected to the really aggressive, very quick moves to the upside that we do see in this market. So I think there is an argument that being a buyer of the Nikkei might be quite good on this dip. Now, I'm not a huge fan just because the H4 here is in a downtrend, so trend following wise, not great. The daily looks a lot more appealing. So maybe a stop. It's quite a large stop though. Or I suppose actually what we could do, and I'm saying we, I mean me, obviously not financial advice here, a tight stop just below the previous low, this sort of support level. Obviously, if we come back down, the likelihood is we're going to continue down. So I don't really want to be in the position anyway in that case. So I think I might take this actually after the stream. We'll see. I need to do a bit more research onto it, but I'm going to add that to the watch list. And that might be a play for this week. So the Nikkei is okay. The Dow saw inflows. I'm not really interested in the US markets at the moment, though. The pound saw inflows, not a huge surprise. The sterling did phenomenally well last week. Massive outperformance there. Not much selling, actually, surprisingly. There wasn't a huge change in short positions. The Australian dollar did see some outflows, but yeah, nothing crazy. What about, let's just see what the COT history is on the dollar. So it's quite flat, actually, over the recent period. What do we see here? So only a slight positive change on the percent base. So yeah, some slight additions, but yeah, there is really nothing going on with the dollar in terms of institutional position that we can really take much information from. It's very, very flat. So quite a boring COT report, actually. I think the Nikkei is interesting, but other than that, there's really nothing that's piquing my interest whatsoever. Right, what's going on here? Watch semis go off a cliff this week. Why do you think that's going to happen? I'm not saying you're wrong. I'm just curious. Senior Iran source: mediators have proposed a 10-day ceasefire of strikes to find ways to revive the US to revive the Iran-US interim deal. That's interesting because one of the headlines I saw last week was that Iran had no interest in a peace deal because they wanted revenge for I don't know what words I can and can't say on the stream, but for what the US has done, they wanted revenge. Essentially, we'll keep it PG. They post it before the market opens. Yeah, I mean, at least they didn't do it over the weekend. You know, at least they didn't follow Trump's playbook of, you know, escalate on Thursday and Friday, and then on Saturday or Sunday you de-escalate and the markets go wild. At least we're not seeing that. But yeah, it is a bit frustrating being a trader at the moment. It's very much like the tariff situation. I've got to say, actually, if you've managed to trade with Trump, you've done well. Even if you break even, you've done well. Because honestly, the headlines we had, you know, tariffs up and down everywhere, it was crazy. And then obviously the Iran situation, crazy as well. So yeah, I mean, take pride in the fact that you're trading with Trump. But yeah, it's fun times. Do you know why there's suddenly a rally in gold? Is there a rally in gold? I mean, rally is very generous. There's a generous term to say too bullish for H4 candles. The reason gold is doing okay, though, is what we said earlier. The dollar is fundamentally quite weak. The dollar is, sorry, not the dollar. The gold is at a very strong level of support. So it's not only technical support here, where we've got the daily and weekly level of support, but it's also the 4,000 key level. I think what we're going to see is a big fight with bulls at the moment. People who want to buy gold at a cheap price relative to where it was previously. You know, we were above 5,000. Gold is now at 4,000. That's a big discount, really. In fact, what is that on a percent basis? Let's see. So gold right now, technically speaking, is on a almost 28% discount from its highs. I think that it's a very valid idea that buyers want to be involved and want to start picking up gold at this point. And again, we do the landscape for gold, I would say, is actually turning a little bit more positive. So yeah, that's the idea. And again, that's why I'm long gold at the moment. The correction, not good enough to make people step in. Also, memory will never reach new all-time highs. 400 to 500 would be very strong for SanDisk. People who invest at 1,000 are insane. Interesting. Okay. Yeah, I mean, I don't know much about stocks and the tech sector and those. That's not my thing. I'm a currencies trader. But from my uneducated point of view, one of the reasons I don't want to be in the US markets as much as possible, on the investment basis, I invest in the S&P basically on a weekly basis. But in terms of short term, I would rather just wait, because I'm very much in the idea that at some point, and I'll elaborate on this in a minute. At some point, we are going to see quite a large correction of maybe 20 to 40%. Obviously, that's a big range. It could be like 25 to 30% maybe. But I did a deep dive either last year or earlier this year. I can't remember when it was, but it was like, I just can't see a world where we aren't heading, excuse me. I can't see a world where we aren't heading towards a significant downside. And a large portion of that is actually due to the AI thing. So as far as I'm aware, AI companies aren't making money. You know, they're burning millions on a daily basis. You know, you got SpaceX, that is now technically an AI company. You know, they acquired Grok. They're losing a lot of money on Grok. They lose a lot of money on their space ventures. I'm fairly sure Starlink is the only revenue source they've got, which does bring in good money, but it's not enough to cover the losses. So there's that aspect. There's also the aspect that banks have massive amounts of exposure to AI debt that I'm fairly sure they're trying to offload. There's all these little things that are popping up I'm just really not comfortable with. And I'm fairly sure SpaceX is actually doing really badly at the minute. Yeah, I mean, look at this. So I just think the optimism around AI is massively overdone and overbought. So when we do get further down the line, whether is it OpenAI, I think is going to IPO, and I think it was Anthropic that delayed it. I'm not, maybe I've mixed that up, but either way, I think we're going to get to a point where, you know, the average trader or not the average trader, sorry, the average person. It's very similar to what we saw in silver. Do you know when us traders were buying up silver at like, 30, 40, 50, and then when it got to 100, we saw people outside pawn shops trying to buy silver, sell silver. It was massive euphoria, and then it crashed like what, 40, 50%. I think it's going to be a very similar thing where we get maybe OpenAI to IPO. We're going to get the average retailers or average people jumping in, investing. Oh, AI is the next best thing, which I think it is long term. And then we're probably going to see some sort of massive correction. I could be completely wrong. Again, please do not take this too literally. I'm not a stock trader. This is just my relatively uninformed opinion, but that's why I'm a little bit cautious on the US markets right now. Of course, when I'm saying this, it might not happen for another 2 years, 5 years, maybe even 10 years. I don't know. But it is something that I'm just a little bit wary of. Anyway, good morning, guys. Good morning, guys. I'm really excited about the earlier starting time. I just saw you were on. Sorry to interrupt. It's all good. Don't worry. Please don't ever feel like you're interrupting. I'm on for an hour these days. So trust me, the more you guys talk, the more it helps me out, because otherwise we're going to get to a point where I really don't have anything to talk about. And you and I are going to be sat here like we're on an awkward date where we're just looking at each other, twiddling our thumbs. So yeah, feel free to talk. Don't ever worry about being about interrupting. So we've got about 20 minutes left. Let me just see who's on after me. I'm fairly sure it's Alan. Is it Alan after me? Yeah, so Alan's coming on in about 20 minutes. Then we've got Nick, then Alan again, and me again. So me and Alan are doing a joint segment later. And then, hold on. Wait, hold on. We're all scheduled for 2. So maybe it might be a triple segment. That would be interesting. I've got I'll be honest, guys. We'll have to just see what's out. I've got no clue what's going on here. So I'll be on at 2 UK time. And you might see Alan and Marco there. I've got no idea. So it'll be fun. We'll see what happens. Oh, they'll check it. Okay, that might be a bit of a bug on the calendar. So we'll see. Either way, don't worry. We're continuing through the day. You guys will get your top class A1 content. So what have we got moving forwards? We have got China 50 is quite interesting. I do like the idea of being an investor in China. Well, I'm saying investor. I quite like the idea of being involved with China. The problem is I don't really like the China 50 index. So I was in it last year, I think, and it just wasn't a good trade. So not in terms of like the position I had. I just mean the market just wasn't great. I'm not sure what. Do I have it here? Yeah, I do. CN50. I might be, maybe that was just a one-time thing. I need to look at it again. But yeah, I mean, it's just not very clean. When you look at a market like, like the Nikkei was a good example, where the price action is relatively clean and you can make quite a good educated assumption on where it wants to go next. This just doesn't really have that. We break below the 200 daily moving average. The consolidations seem a little bit sporadic. The price action doesn't look very nice to be involved with. I think maybe as a long-term investor, maybe on the actual like index might be quite good, but actually, never mind. It's not really done anything since 2016. You know what? We'll scrap it. Yeah, nah, not for me. Not my bag of tricks there. Oil, seeing significant downside. Now, I don't want to be that guy, but who was the one telling you I think it's going to correct this gap? That's what you get. This is the quality of accuracy you get when you come to these streams. Of course, I am joking, but I did say I think we are going to come up towards 85, correct this gap, or fill the gap, sorry. And then I didn't know after that, but that was the idea, and it seems like we are continuing to the downside from this point. We'll see if this continues lower. I'm not sure, to be honest with you. I'm not an oil trader. Again, I am a currencies trader. That's my main thing. But in terms of oil, it might be a case of, again, we had some escalations, oil pumped, and now, again, it's priced in. We might continue lower from this point. We'll see. But in terms of actually trading oil, I don't think it's a really great idea, to be perfectly honest. I think the issue is oil is obviously reacting headline to headline. It's a very similar thing to what we saw over here. So, you could have been a buyer at these support level, and you could have caught a great trade. But if you didn't take your profits, you would have been back to entry very quickly on the next headline. So I just don't think it's worth trading. It's not worth the risk to the head or the exposure to the headlines. Do you know what I mean? So yeah, personally, going to stay away from oil. It's not worth it, and we don't have an edge finder reading, so the fundamentals aren't warranting a position either right now. I've started on a personal account of $1,000. Any advice on growing it? Yes. So I'm going to assume you've done your testing. You've done all the process to know that it's worth trading. I'm going to assume you've done all that. If you've not, you should do it. Minimum of 500 trades over a 5-year period is sort of the baseline. And the reason you want to do that is because the 500 trades gives you the quantity that will give you, your expected, expectancy, profit ratio, max losing trades in a row. It will give you all those stats. But then the 5-year period will give you a good idea of how your strategy performs in different regimes and conditions. Okay, that's the baseline. Or at least that's what I would consider a good back test in length. So hold on, what was the question? Yeah, so going forward, if you've done that, your strategy works on paper. The next thing would obviously be live testing. Don't do anything. Don't make more deposits. Just trade the $1,000 over the next 6 months. If it still works on live, then start depositing. So then at that point, you're not just relying on returns because the percentage gain on a $1,000 account is minor. I'll be perfectly honest. I don't mean this in a rude way. It's just not worth that much. So you need to deposit as much as possible once you know that you are making money in the markets consistently. So, if you can average, I don't know, let's say 2% a month for argument's sake, and then you deposit maybe $100 a month, you're very quickly going to scale. And obviously that scaling is exponential. The more you deposit, the more your returns are. And then the more your returns are, the more money you get. So that's the basic idea, is just scale as aggressively as possible. But you obviously, again, you need the proof that it's worth scaling. But also the other thing is, do you actually outperform the benchmark indexes? Because if you're making, let's say, 15% a year, it's good, you're profitable, but could you invest that somewhere else and get better returns? Maybe. Anyway, of course, you need to look into those things on your own, because if your benchmark index is the S&P, then 15% is very good. But if your benchmark index is, individual stock picking and more of an investment style, a bit more aggressive, then 15% might not be that great. So again, it's very individual, but that's my 2 cents. Invest in Europe. I'll be honest, I wouldn't be investing in Europe. I think the friendliness to business is significantly better in the US. I mean, why do you think not all, obviously, but a lot of the big companies that do these crazy returns and innovate and really do big things, majority of the time in the US? I can't remember the last time we had a big company emerge out of the UK. I think Revolut was one, but then the Revolut owner obviously moved to Dubai. So yeah, I really don't think Europe is obviously I know the UK is not Europe anymore, but I wouldn't say Europe is a great one, to be honest. I would stick to US. Obviously, again, that's long term, so we're not going to go into the AI potential crash there. Do you reduce risk during geopolitical escalations? No. Well, actually, sorry. Yes and no. It really depends on the trade. So I structure my risk in a very linear way. Excuse me. So where's the text tool here? There we go. So what I do is I'll break up my portfolio into 2 sorts of risk definitions. So you've got theme risk. So this would be let's say let's say the Fed. So let's say the Fed was hiking. So this is a theme. Okay. So what I want to do is figure out, okay, well, if I'm buying the dollar, how much risk do I want to put on that individual theme? So maybe I want to put, a max of 3% risk. And in this case, that might be either 3 different attempts at going long on the dollar, or it could be 3 individual trades at the same time with 3% exposure going long on the dollar. But then you've got another type of risk, which is just your overall exposure. So you got exposure. Oops, hold on. Exposure risk. So this would be, let's say, I'm long GBP USD. So this would be GBP would be +1, and then USD would be -1. So then let's say I was a euro dollar long as well. That would be EUR +1, and then USD -1. So then that puts my overall exposure. The pound is 1, the euro is 1, but then that puts me at dollar -2. So my exposure to the dollar is obviously 2%, or 2R that might make it a bit more simple. So then maybe if my my personal exposure risk per currency is 3%, I could take one more short position on the dollar. Does that make sense? Hopefully that makes sense. But that's the way I manage my risk and think about, you know, where I can allocate and when. So actually, sorry, I didn't even answer your question there. So no, I don't reduce my risk per trade, but I might reduce the risk per theme. So if there is like the Iran situation, I might reduce my theme exposure to like 1%. So I'm taking maybe one attempt on oil, which is what I did a few days ago. Actually, if some of you remember, I took an attempt on oil, it didn't work out. That was it. That's the only one I took. I'm not taking more because that was the exposure I was willing to take on that specific idea. So hopefully that answers your question. I might have been a bit long-winded. On Friday, it will correct with a gap up. That's an interesting idea. Very possible. News buy or sell? Hold on. I'm off in 10 minutes. So let me just quickly catch up with the chat and then I can get back to your question. Buy everything you can, Monopoly. Well, yeah, maybe that's the way to go. Hi, James. Do you think going for prop challenges is still a good idea? Yeah, I mean, again, the prop challenge thing goes back to what I said about the $1,000 account. If you've got a strategy you know works for prop firms, absolutely, 100%. The problem I've got with prop firms is just the risks aren't, the rules aren't realistic. So yes, I think it's possible to pass prop firms. I'm not saying it's impossible by any means. But keeping the account is a completely different thing. Every single trader will hit a 5% drawdown at some point, and that's not really even a debate, I think. So you will breach the account at some point. So all you need to do really is figure out, can you pass the evaluation period? If you can, great, milk that for as long as you can, but don't expect to keep it forever. I think that's one thing that prop traders sort of misunderstand. It's like, I would never tell someone a prop firm account is a replacement for a personal account. I think, you know, if you're very good and prop firms are your sort of niche, that's your thing, like the prop firm kit, I think is a good example. You can essentially turn it into a business model where you can write off the expenses as for taxes. And you can have, like, you know, 20 different accounts running at once, or different ideas, different strategies, and different risks. You can rotate them and that type of thing. That's one approach you can go with. And in that case, yes, I would say that can be a replacement for a personal account because you're so diversified across firms and different accounts. But if you're buying like one or two accounts, again, fine, but you're not going to keep them forever. So keep that in mind. But yeah. However, on the topic of prop firms, scan the QR code. I know A1 have prop firm discounts and giveaways and all those types of things. So I actually would say, if you're new to trading and you do want a prop account, the best way to do it, I'm fairly sure, let me just double check, fairly sure the A1 team have a giveaway section. Yeah, here we go. So if you go to the A1 trading website, you go to broker and prop firm offers, you got prop firm discounts and prop firm giveaways here as well. So either get a discount on Olaprime. Olaprime's very good. They got audited by a company that it came back squeaky clean, no problems with them. And then prop firm giveaways here, you can win free prop accounts. So I'd say, again, rather than wasting your own money, or at least all of the money, A1 are a great support for especially newer traders that want to get into the prop industry. What's the longest period you didn't participate in trading? Probably 2 weeks. That was mainly because I was on holiday, though. Normally, I'm very active in the markets. There might be a week, like last week, I wasn't active at all. I think I had one trade. But yeah, overall, normally I won't go more than 2 weeks without placing a trade. Again, unless I've got something like a holiday or whatever reason like that. What do you think about UK 100 short term? Okay, so UK 100 is getting a very bullish score of 8. So overall, we want to lean towards a long bias. But let's have a look at the technicals first. So what do we have here? Daily time frame is bullish. The H4 is also bullish. I'll be honest, it doesn't look that bad. technically we did have a pretty nice fib pullback here into previous structure. So yeah, I'd say strictly speaking, or mechanically speaking, my entry actually did trigger for a long position on the FTSE. The reason I didn't take it, and the reason I don't really like the FTSE, is because of the way this market behaves. So of course it has trending periods. I'm not, it definitely has these clean moves to the upside, but it's one of those markets, when it gets into a range, the ranges are absolutely disgusting. So this, in my opinion, is a range. Although technically the moving averages are to the upside, they're not fanned out nicely. They are kind of side by side. It's a bit of a range. So how long has this been going for? So this range has been 103 days. 103 days of just range bound period. So no, I don't want to get involved in that. Then we had another period, I think over here, where we had like 9 months of just range. Yeah, 200 days of just no direction. So it's just not a market I'm very interested in being involved with. But yeah, again, technically speaking, right now it's bullish. Fundamentally, it's bullish, but for my own sort of criteria, it just doesn't really meet it. Do you trade prop? I do have, well, yes and no. It depends. If you count Darwin as a prop account, then yes. If not, then no. I've traded with Maven, got funded with Maven. I've been funded with Top Step a couple of times, but no, I'm not. I wouldn't classify myself as a prop trader. My main appeal with prop firms is to pass them, go full margin, try and get a massive payout. If I don't do it, I'll blow the account. That's fine. If I do, great. That's really all I go for with prop accounts. I'm not someone who takes them very seriously at all. But yeah. You guys are misleading because you get paid. I don't get paid. I get absolutely no payment for these from prop firms at all. If anything, I'm actually kind of against them in most situations. But no, saying they're a scam is just fundamentally false. That's just an absolutely wrong statement to make. I think they are very difficult, but they are what they say. It tells you if you make, let's say 8% and you don't reach 5% drawdown, you'll pass the account. That's the rules. If you can't do the rules, that's your problem. You know what I'm saying? That's not a scam. I think, yes, there are scam firms. There's absolutely firms out there that will take your money and not give you payouts and all these dodgy things. But that's why you've got to find one that doesn't do that. Like Ola Prime, again, was audited. They're promoted. They're a good firm. There is nothing I've seen that would sway my idea otherwise. FTMO, again, that's another good one. Very good reputation. But then if you're someone that is, cash poor and you're looking for a $50 account that's 100K, obviously you're going to get scammed. So yeah, no, again, that's my 2 cents. I spent $80 in FTMO account, 10K challenge. I got funded. I'm receiving $700 payout. Wow, that's a fantastic ROI. Main problem I found was using leverage. Yes. Again, prop firms, they're not a replacement for a personal account. But if you are a good trader and your only real issue is capital, and if you're in somewhere where wages are low or whatever it may be, then yes, I think a prop firm can be a good way out of that. But I'm funded. I stayed disciplined, worried about losing the account. Well, that's really good. I'm really happy to hear that. That's a fantastic job. So well done. Wait till you try withdraw. That's a fair point, King. There are sometimes hidden rules, but again, that's down to you to do your own due diligence. You have to look at the terms and conditions. You have to look at all of the small print. You have to read the FAQs. You have to look at the reviews. So again, it's like going with a broker. You would never just open a brokerage account with the first person you see or the first brokerage you see. You would go and look at the reviews. You'd have a look at maybe a YouTube video that reviews them potentially. You would read their terms and conditions. You'd look at the spreads. You'd look at commissions. You'd look at all these things, and you would make an educated guess or an educated opinion on if you want to go forwards. That's just part of being a human. You do the same thing with anything. When you buy a car, you have to do all the same things. Doesn't mean the car company's a scam. Yeah, exactly, Quang. That's the point. Anyway, we are in the last minute of my segment, and then who's coming on after me? Let me just double check, make sure I've got it right so I can hand it off properly. Alan, yeah, I think we've looked at that 3 or 4 times now, but I keep forgetting. So we've got Alan coming on in a minute or so. More like exploiting people who just can't trade. Yeah, that's basically. I mean, the business model itself is very much like a Pon. Well, no, I wouldn't say it's Ponzi. I would say the business model of prop firms is very fragile because obviously, if they stop getting customers and still have to do payouts, they're going to end up very in a very bad situation. So that's another thing. If you're with a bad firm that isn't well known, that's a big issue because they need to be well known. So obviously, they're getting customers. So they can also fund the payouts. And also there's one with Maven. I think there's also a discount code for Maven with A1, but they have a massive cash reserve. So even if they do end up in a bad situation, they can still afford to pay out all their clients. So anyway, we're moving on because again, prop firms aren't my area of expertise, but that is my current opinion on them. Thoughts on oil this week? Guys, I'll leave the oil question for Alan because we are at the end of my segment, but it's not goodbye forever. I will be back on in a couple of hours. So guys, take care. See you later. Stay safe. Don't get margin called and enjoy the rest of your days. Thank you for being here.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Let me add myself here to the stage. Hope you guys are doing fantastic. Happy Monday. Alrighty, let's get going. This is awesome. So we have 2 segments each throughout the week, which is awesome. We get to extend the live stream a little bit, get some more coverage out there for the people that are maybe unable to watch us, if you are in other parts of the world. So super happy to do that. Hope everyone is doing great. Hey, Jeremy. Hey, Simo, all the regulars out there. Hope you guys are doing fantastic. So we're going to stream the UK session going into London or New York Open, which is pretty cool. So, all right, let's get started. So I think James was just talking about oil. Let's see the chat here. What's going on with oil? You guys started a new schedule? We did, man. If you go to a1trading.com/ here, I'm gonna do it on this screen here. It's actually got a makeover too. a1trading.com/live stream schedule. You can see that it is in your time zone, first of all, which is very helpful. You have a new UI layout, which is really nice. And then whoever's on is highlighted in red there, which is really cool. And then you can just hit watch now. So you can see everyone here. We have a cool little icon of ourselves. It's pretty sick. It's pretty sick, not going to lie. So yeah, we are extending our coverage. But what's going on with this live stream here? And the stream has stronger rotation than the S&P 500. Let's talk about that rotation in the S&P 500. Relative, like it's Nasdaq got beat up last Friday. Okay, we had a lot of AI names take a hit. There was a lot of scaredness, if that's even a word, in tech. S&P slowly grinding higher though, which is good. It's good to see that. Oil. Okay, what's going on with oil here today? Down on the day, a little bit red. I actually made a video about this on Friday, but essentially you had a one directional push lower in oil. And right now, in my personal opinion, we have the fundamentals that are kind of pointing in the direction of maybe we don't do rate hikes, but maybe we just hold rates for an extended period of time, right? That's kind of like our hawkish scenario that I think would be in play. However, you do have oil here starting to get a little bit elevated. And in the month of June, you had lower oil prices trending lower, and that translated into your CPI and PPI coming cooler. So although that is great for the rate hold story or rate cut story, that could all get walked back if you do have elevated oil prices come back and stay there, right? That could unwind a lot of the progress that we've seen in inflation. And so right now we had a one directional push to the downside in oil, and we had no pullbacks there. So this is very, very normal, I would say, right? For a push lower, a pullback. Now the question is this a pullback, or is this just the trend reversing again, right? So you do have the 50 and the 61.8% retracement level lined up here with this level of support, which this 85 handle was essentially the support level when the war was like full on in go mode. You know, escalations are up there, right? So every time we typed into 119, you had a rejection, and then you had a rejection to the upside there at the 85 mark. So this is previous support, potentially term resistance, right? As price taps into this level here, the 61.8 also lines up perfectly there with that level as well. So we'll see. Do bears have enough to step into this thing and continue this lower? And in that case, this is just, you know, a trending market, right? You had a push lower, a pullback, and then another leg lower. Or is this going to be another case of the trend is reversing? You have elevated oil prices, and that, you know, if it stays there, then that can unwind the inflation progress. And in that case, you continue to see yield higher, the dollar stronger, gold under pressure, right? So that's kind of my thought process on oil. Now, headlines have been iffy. Okay. You have positive headlines all the time, and you also have negative ones as well. And so to me, they kind of don't hold any weight. I kind of revert to what does the market price in, right? So if you see a headline and you see like yield significantly lower, then I guess the market is taking that very well. And the opposite is true. So we had one this morning right before I came on, which is and these two ones are brand new. I haven't read those yet, but essentially what's going on as of latest, if you guys pay any attention to the headlines, senior Iranian source mediators have proposed a 10-day ceasefire of strikes to find ways to revive the Iran-U.S. deal. Okay, mediators propose Iran and U.S. to return to pre-July 9th positions. Okay, can't pronounce the guy's name. Announces sea navigation ban on Saudi Arabia. Will impose a sea navigation ban on Saudis Monday. Okay, so pretty cool. Yeah, just in time. So just in time for the market to open, and you know, it's pretty funny how key data points, whether it be a headline or a news catalyst like a market moving NFP or CPI report, you know, they kind of line up and they start to happen once you get to these key levels, and they just goes to show that the market is super efficient at pricing things in. Okay, but yeah, so we're gonna see. My bias is leaning towards some dollar softness. If I'm personally being honest, okay, that's my position with dollar Swiss here, though it's been in literally break even forever. I'm filled in right here to the short side, stops above structure, and this kind of translates to DXY, right? So DXY is also within this level here, that if it breaks lower, this upward trend line and this level support, I would see some softness there, and hopefully target this 99 where this 200-day moving average lives. That would essentially be somewhere right here with the dollar Swiss currency pair, 0.792-ish, 0.795, somewhere around this level where that 200-day moving average is. I would like to add more positions to dollar softness, to dollar shortness. What that would look like, I kind of like pound dollar to the upside as well. I like this pullback into this 38.2% retracement level. Haven't got it yet, so I'm going to be patient on that. If I get it, fantastic. If I don't, that so be it. But I do like the pound to the upside. In fact, I think the pound basket as a whole is bullish. So last time I checked, I saw a lot of opportunity there. So if we just type in pound, and by the way, I love to watch this, right? So for the people that have the edge finder or don't have the edge finder, a really cool way to see if you have some strength in just a specific currency pair or in the basket as a whole, you can go to in currencies, for example, you can go and toggle in minor and majors only, and then you just type in the pair, right? So in this case, GBP, and then you get all of the GBP scores. Okay, so very cool to see, because you can have a score like pound dollar bullish, but then the whole pound basket is weak. Then that's just not pound strength. It's mostly the US dollar that's doing most of the heavy lifting there, right? So you want to see if the basket as a whole is doing quite strong, and it seems quite okay. You have pound dollar getting a bullish reading. You have pound Swiss bullish reading, pound yen bullish reading. You have pound Aussie and pound CAD there as well. They're neutral. And then you have pound Kiwi, which is neutral, and then Euro pound is neutral as well. So, okay, we'll see. I do like this technical read, though. You have a very bullish reading on pound dollar. I think right here, if you were to retrace into this level of support, which is where the 200-day moving average lives as well, I would like that opportunity. So I'm going to be waiting on that. But for now, I have dollar Swiss to the downside. And again, if you have a re-escalation to the war, or you have oil just stay elevated, or maybe oil does this, where you break this level here, this level of support probably turn into resistance. You break the 61.8, and we start to get back into this range here, then likely than not, the dollar story to the upside comes back. And then I would look for my good old euro dollar short. I would look for maybe some Kiwi dollar shorts, because technically here looks quite well. Aussie dollar as well, right? Looking for some short opportunities there. But for now, I'm kind of leaning towards a bearish bias, a medium to bearish bias, a neutral to bearish bias on the US dollar. That's kind of what I'm looking for. Gold as well, right? So gold, with that in mind, gives me the kind of outlook that I maybe want to participate in this to the long side. So let's look at the gold fundamentals here real quick. Let's see. We're going to go to, I'm going to make it easy for us today. We're going to go to metals only. Platinum's bullish. Gold is neutral with a +2. Got a recent tick up, but it's not in bullish territory yet. Let's go to the sentiment reads. Let's go to put to call ratio on gold. I'm just curious. We had a very extreme put to call ratio on gold last week. Okay, pretty neutral, nothing crazy. Let's go to the net options volume. Still very bearish, though extremely bearish. What do you guys think? Do you guys use net options volume as a contrarian signal if you get too extended one way or the other? Or do you see this as that's where the wave's flowing? You want to ride that wave. Okay, so we're very, very bearish there on gold. This is my view from a technical perspective as well. You are at the apex of this wedge here. Okay, you also have a level of support here as well. I think that there is a meaningful breakout in either direction. Okay, I think the direction of gold will be based on three things. The price of oil, which this is something I've been saying forever, and I'm sorry if this is boring, but it's kind of how simple to read the market is. Price of oil, yields, and the US dollar. Okay. If you have, for other people that are curious about gold price, is it going to go up or down? What should you do? It's very simple. If you see this oil chart continue going higher and US yields continue going higher, respecting this upper trend line, and the dollar catches a bid here, like it seems to be doing right now, where you have this upward trend line, this level of support, and it's catching a bid and it's continuing to the upside, then very likely you see a meaningful breakout in gold to the downside. If you see the opposite, where you see the price of oil, wrong one, the price of oil here reject this level, the 61.8, continues lower, and you start to see yields break below these trend lines. For example, look at the 2-year yield, right? Very close to it. And you see the dollar index break lower as well. Then the case is go to the upside. Okay, if you get a breakout of this level. What makes it tricky is if you do get the scenario where a go to the upside makes sense, you still have to overcome this 200-day moving average, in my opinion. So you can still buy this thing on the breakout, I would say, if you get those things in line. However, you would need to really see a breakout above this 200-day to see continuation and, target levels of the 5,000s, right? The 5,000, 5,600, these levels, that's what you would need to see. So very, very simple outlook with gold. It's very black and white to me, in my opinion. However, right now, you're not seeing any of those things, right? You still have the DXY not really making a decision. So that makes it difficult. Yield as well, not really making a decision. I mean, they're trending higher there, so you could say that. Oil as well, not really making a decision quite yet, right? We're still at this level, and you still need to see whether A or B, bears take it over or bulls take it over. How these are closing choke points. This could be very bad. Is that I'm not really familiar with the Middle East geographically. Is that like a passage? Like another strait, maybe? Simo says, typical Monday headlines. That's how it is, man. That's how it is. Pedal to the metal on the weekend, and then come Monday, you let off the gas a little bit and let the market calm down. Let's see. These will announce navigation ban. Let's see what this is. Hue this. Let's look this up together. What is this? Because I have no idea what it is. Where is Hue this on a map? Is it a country? Bab al-Mandeb is the other straight looking thing. Houthis. That's how you pronounce it. Houthis. Where is Houthis? And what is it? Is it a pipeline? Is that what I'm getting? No, it's a sea navigation. Is it a country? Am I missing something here? It's a people group. Okay. Makes sense. That makes sense. So they are enforcing some rules then on navigation, which is not good. The question is, are they a powerful group, and how influential are they? Simo, you got me. Thank you, Simo. I really appreciate you. Houthis is an Islamist political and armed organization based in Yemen. Well, Yemen is very, very close there. In fact, I could see them having a valid chokehold, right? Yemen is right here towards, they have all of this part of the strait. Okay. Well, that's not very good then, I would say. We'll see. Iran allies, yep. Yeah, Yemen's a volatile spot, man. Okay, so you have essentially added leverage for the Iran side, okay, which is kind of counteracting this, this whole, mediators have proposed a revisit to the July 9th kind of state of negotiations. And then you have this coming out. So again, right, the headlines there, you can't really overweigh them. You can't overvalue them, in my personal opinion. They are just so back and forth where it's just like, look at the price action. What is the market pricing in, right? What are yields telling you? What is oil telling you? What is the dollar telling you? And that's that. That is the net reading, right? Because you have some people that are net optimistic, net pessimistic, right? Both can be true, but it's really just to what the market's really telling you. That's what I would say. That's basically them saying, KDX says that they can close the Red Sea, which is an alternative route, if you're reading that correctly. Well, yeah, they did, from a regional perspective, geographically, Yemen is right there next to Iran, and that just gives, more coverage in the area, which is not good for, I would say, for peace, if you are trying to go that route. Someone asked earlier as well, USD CAD, thoughts on that, which is great. USD CAD, I have a medium to long-term viewpoint on the dollar being relatively strong compared to others, right? From a central bank perspective, most likely maybe other people cut faster than us. And so from a relative perspective, I like the dollar, specifically the dollar over the Canadian dollar. So I'm looking for pullbacks. You are seeing one here last week as well. A pullback into this level 1.395, right? This was previous resistance once, twice, 3 times here. And if you were to tap into this level, I'd like to see if there are buyers stepping into this market. You also have the 200-day moving average there as well, right below it as well. So I like that one to the upside. That could also be a great hedge if you do get into this level here and you are concerned of re-escalation, then maybe dollar CAD could be a good position to the upside where you have some long dollar exposure in case things do start to hit the fan. You have a pretty good entry, risk defined. You put a stop below the 200-day, and then you can let this thing ride higher. I think that's a good trade as well. So I'm patiently waiting for a continued pullback in dollar CAD. You had some recent good employment numbers in Canada, which is really helping this as well. You also have some data points printing in favor of a lower dollar. So you had the not spectacular NFP report, then you had CPI and PPI, which are all forces that lead dollar lower. So you have in the now term, you have some forces pointing at this to continue the pullback. So I'm going to be patiently waiting there. From a edge finder perspective, if you go to top setups page, it's getting a -7 reading, if I'm not mistaken. Yes, -7, very bearish reading. So that could promote a continued pullback. And in that case, I'll be looking to pick it up. So I like this level a lot. So this was support here at one point. If you look at the chart right over here, we had a breakout. You pulled back onto this level. It was resistance. You chopped around. You got to this level again. It was resistance. You came back lower. You pushed all the way higher with really no pullback. This was a one-directional push. So this pullback here is a good sign for me. From a Fibonacci level, let's see where it lies at. You have this level of potential support right here at the 50% retracement level. So that's my thoughts on dollar CAD. I like it. I like it to the upside, and I'm patiently waiting. I was very patient right here, and I never got any pullback. I was very, very much looking to go long dollar CAD, and I saw this thing run up without me with no pullback. And I was very sad. Very, very sad. Let's see what else we can look at here. It's a pretty quiet day nonetheless, though, besides those headlines. Gold's flat. Silver's doing okay today. Oil, pretty flat today. You have the dollar not doing much. It's catching a bit, though. It's catching a bit. Stock market's doing okay as well. The VIX is going back to sleep. We tapped into this 200-day moving average. We had a percentage day. I think it was like, what is this? I'm not going to guess. This was a 10% day on the VIX on Friday. Starting to cool off a little bit. We'll see if we have some follow through there. Yeah. Stream started earlier. It started earlier, Mr. Shakes, and it's going to stay that way. Okay. We extended the schedule to the morning. So you have your regular schedule that we have always had, but then we added coverage in the morning as well, or early in the morning. That way, whether you be in different time zones or if it's more convenient for you, we're going to be streaming from the London session into the New York Open every single day. So unless there's like an FOMC day, I would imagine it's somewhat different. And if you're new to the stream, then join the Telegram channel. I just went ahead and also typed a link there in the chat. We got a couple in there. Join the Telegram channel. It is completely free value. Let me show you what we're doing in here, okay? Every day, I write up the 2 most important charts of the day, okay? Whether it be oil, right? So on Friday, I gave the same analysis that I gave today. As far as technically, you have this important level in oil. We'll see what happens. I went over pound dollar as well, right? We had some very, very strong pound dollar in last week. So we have the analysis, which is completely free for you. It gives you the macro and technical read of the day, right? So if you just want to understand what's going on in the world macro, 2 minutes a day, just read the excerpts, the articles, you'll love it, right? And if you want to go even deeper, you can just click this link here and read the full article. You also have daily polls every single day to keep you sharp, right? So just stuff. You have discount codes, right, to the Edge Finder or prop firms, anything you may need. You have discount codes there. You also have bonus content. So this is Nick, right? Some bonus things that things that are on his mind, and some very, very cool stuff, right? You even had an opportunity to go to the World Cup for free. Okay, this is the value, right? This is free for you to join. There's nothing there. It's just free for you to join, and you have so much value that you can get from it. So go ahead and join the Telegram channel. You guys will love it. It is the best one out there. Okay, so that is my pitch to you, and it's a very good one, I would say. Can you do gold? I just talked about gold, Koki, but you know what? If you stick around to the stream, I'm sure we will be talking about gold because. Me personally, it's something that I'm watching like a hawk, right? There's really nothing going on with it right now, but there's a lot of potential with it. So I'm watching gold. You can have a breakout to the upside or downside. You just need a fundamental driver, which is the Middle East cooling down or heating up. That'll really continue its leg. But for now, gold is asleep. It's asleep. UJ swaps is on another level. Oh, yeah, man. If you go short UJ, it's tricky. This is a tricky trade. You the Bank of Japan intervention really doesn't seem to be holding its weight. It seems like they are increasing their tolerance, right, for this. They voiced before that it's hurting household consumers. That makes a lot of sense, right? It's bad for them, but it seems like their tolerance is they're raising the bar a little bit. And it's tricky because if you looked at 160 and let's say that you full ported this one, right? You are in a bad spot. You are in a bad spot. And central banks don't always have to support a certain level. You look at Euro Swiss, for example, in 2015, they were going to defend that level forever. And then one day they say, never mind. And then you have this thing move thousands and thousands of pips in a 15-minute span. So this is Euro Swiss, right? They were defending this level forever. Okay, it was like the easy trade back in the day. And they said, look, this is unsustainable. Either we intervene forever or something else has to change. And so they said, you know what? We're lifting the floor away. And you had a Euro Swiss drop, the Swiss National Bank dropped 19% in a day, 2,200 pips in a day, right? So if you have, I'm not saying this is going to happen, but if you have Bank of Japan say, you know what, 160 level, we can't keep intervening here. It's unsustainable. We're depleting reserves. And they just remove that floor away. Well, then you can have a similar situation, right? So I would rather on any meaningful dip, I'm not saying they're not going to intervene. If they intervene, great. If they can drop this thing off maybe 3-4% to 3% is right here at the 200-day 158 ish. If we can get a drop of 3%, I'll just buy a dip. I'll buy a meaningful dip. That's kind of what I'm looking for in UJ. Fundamentally, you still have a rate differential that supports this to the upside. World Cup's over now. Time for Trump to get serious with Iran. Yeah, man, it's been very tricky to navigate for sure. Noman says, if you're trading CAD CPI, what's the direction you're taking? Let's look at that. What's going on for the calendar this week? Forex Factory. CAD CPI is this morning, huh? Okay, what do we got today? Oh, it's coming out in 3 minutes, so we'll be able to cover it live here. CAD CPI is looking to cool. Previous 1%, forecast minus 0.2%. Okay, well, if it's cooler, then maybe dollar CAD catches a bit higher. However, I think the better trade is if you have CPI come in hotter for Canada, then that just fuels the bearish outlook for it in the short term, right? Because you have a lot of bearish things kind of pointing in this direction for the chart to go lower. What else do we have? CPI quarter-over-quarter in New Zealand later today. You have UK CPI as well, looking to cool a little bit. You have Australian employment change. You have some stuff going on. Not in the US. You have no US macro, it seems like. Yeah, no US macro besides unemployment claims. CAD CPI is in about 2 minutes. Gold is pushing lower, oil is pushing higher. I believe we can see 39.66. What's 39.66? 39. Oh man, this is like a. Are you scalping this thing? 39.66. Where even is that? So from where prices now and 39.66 is like right here. I don't know, man. That's a little risky to me. That's Yeah, that's a little risky. I mean, I don't know. I'm not a scalper, so please, I'm not trying to offend. I don't know how I would do this. I guess this lower trend line here, if you respect it, continue it lower, then maybe. But to me, that's a little bit too short term, in my opinion. I'd rather catch the bigger move instead of catching that move. I would rather catch a move of this caliper. So from the 4,011 where we're at right now to the 200-day 4,500, which is 12%. I'd rather catch that move than the smaller one in gold, in my opinion. And if you were to, get a breakout either way, you can one catch the bigger move, but also have, some strong technical confluence, if I would say. CAT CPI should be dropping here now very shortly. Let's go to Financial Juice for real-time use. What happened? Year over year, cooled lower a little bit. Okay. Yes, we have Nick here coming out shortly. So again, live stream schedule, a1trading.com/live stream schedule. You can see who's up. And we have Nick here coming up shortly. Then you have Marco. Then you have myself once more. And we go on and go on. Alrighty, let's see. How can I? All right, I gotta do the ad here. Let's see. Nick, help me out here, man. Let's see.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live. That's A1Live for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream. Good morning, guys. Wow. It is a cool day for me here. I've been streaming since 2018. And for a long time, it was just me. And I have to say, I was brushing my teeth this morning, watching Marco's stream at 6:30 a.m. And I was like, you know what? This is awesome. Trading, is a lonely sport, they say, but not around here, man. We got a crew. We got a wonderful group of great guys. We would love a lady to show up. If you are a female, trader that likes macro fundamentals, please, we are desperate. We have a dude fest over here, which is fine, but we would also like, a female anchor would be pretty cool to get on here too. Anyways, with that said, I am not going solo today. I am actually surprise guest host here has arrived. Let me just adjust this on my side because we are bringing in the one and only Chris Pulver. Hold on, there it is. Chris, what's up, man?
Good morning. Happy Monday, man.
How you doing, man? Happy
Good.
Monday.
Calendar's looking good. I'm liking that.
Yeah, I was just saying it's kind of hype to have just such a group of knowledgeable people sharing ideas, and that's what it's all about. So I'm glad to be here and share the stage with you. Chris, we are going into a rebound here today. Unbelievably, I can't possibly have fathomed this, but with 1 hour to go, we are now talking about a ceasefire again with Iran to the market open.
Well, I mean, that's probably why the market's up, 30, 40 points from overnight. Pretty key level to watch today is 7,500. If we get above it, we probably have more of the melt up. We're coming into a pretty thick earnings season this week with It's quite the mix. We have Tesla, Google, IBM, which had a horrible print, and they dropped like 20-something%. I might actually play IBM if the implied volatility is high enough that I can get some premium there. I'm trying to think. GE, Vernova, Texas Instruments, Blackstone. There's probably 10, 15, 20 stocks I'm going to price out for some earnings.
Yeah. No, this week I've been seeing a lot of people saying, the economic calendar is really light this week, which is true from a macro perspective, but not so quiet on the earnings report week. I mean, we're kicking off, we're getting into it this week, and that has a lot of potential to move some of our indices here. Gold is floundering here, frustratingly so, just choppy nowhere. But we'll keep an eye on that. And oil is all over the place this morning. I don't know if you've been watching this, but huge jump. Fall back down. We're rising again. This is kind of evident of a geopolitical sprint that we're seeing out of the gate here today. I would tend to agree that, well, here's my question, Chris. Earnings season is like stoked, heat up to the max. And we've seen a couple interesting examples of like how hyped up names are, like Micron, Broadcom, Taiwan Semi. Like all three of those, to my knowledge, put up remarkable numbers and the stocks still sold off. So when I see that behavior, it does make me a little bit nervous that like, okay, you've got expectations for stocks that are pretty astronomical. But perhaps a little bit of that sentiment has been reset on some of the semis. Like semiconductors have had a little bit of a pullback here. I know we've talked about this in the past. What point did you say you're kind of intrigued with the semi stuff? I know we had talked briefly about the possibility of maybe scooping up some names if they get low enough. Do you have your eye on any individuals? Would you play SMH? Would you touch this stuff or not at all?
I do have trades on SMH and SOXX, but it's all the way down to the March lows. So I mean,
that's right.
To me, the more conservative play is I'm playing the March lows. Individual names, I don't mind looking at. Micron is pulled back just shy of the 50%. So if we take that, April low, so that March, April low, all the way to the June high, I mean, 785. If we hit that like 785 to like maybe, I'm just looking at the 50 and the 61% fib zone. If those levels get hit, I'm probably taking something to find risk. I don't know if the implied volatility is going to come down enough to make that like asymmetric. So can I get a trade on where I risk one to make two? I don't know if they'll price out that favorable. But if they are, let's say 1.5 to 1 or 2 to 1 be great. I'm sure I can construct something in a way that I would like it for something to find risk. I just don't want to pay a lot for that. I mean, I think that right now, I want to ask you this. So what's kept the markets near these all-time highs as semiconductor? I mean, Micron is down, 35%. We have SK Hynix and the Kospi down. All these chip stocks have finally had a bit of a reality check, right? But while that's been happening, what's MAG's been doing? MAG's has
been
gone
holding up.
So the reason we're at the reason we're close to all-time highs is because the MAG 7 started doing the heavy lifting again. And they were, from forward guidance, it's like, oh, the MAG 7 is actually cheaper than it was going into the year. So it became this like almost large cap value trade. And I think this is what created the resiliency once again. Now, going into this week into the end of the month where we have our official like MAG 7 earnings, like I think Google and Tesla this week, and we'll have Amazon, Apple, which Apple just crossed. I want to say it's like 4.9 trillion right now. It's like I think we poked 5 trillion for a second. But point is, if MAGs keeps going, I think the resiliency remains. My concern is that this was a short-term rotation. Semiconductors are under a lot of pressure. What do you think about this, Nick? Either we have to go higher on MAGs to keep this resiliency alive, but if we roll over on MAGs and semiconductors don't look any better, I think that's where the concentration risk is at for like, oh my gosh, here we go. Like even with good earnings, the market could fall because semis are down and MAG 7 doesn't sustain. But we could also flip again. We could go semiconductors way up again and MAG 7 just levels off. And it's like, we just have this like back and forth. It's no longer like, hey, let's not go to staples. Instead, let's just do semiconductors for momentum and MAG 7 for value. That's kind of what's holding us up right now.
Yeah. And I think it's a really interesting that inverse correlation, I don't think is done, where you have memory competition from China, competition from Korea, competition from within, competition from Apple, who's wanting to source products from China. I have been a believer for a while. My portfolio has not been heavily tilted in the direction of semiconductors, unfortunately, right? It would have been great if my portfolio was all semis for the last year and a half, but it's not been.
Right.
Here's what my thought process is on that. And I think we talked about it maybe a week or two ago. Softer prices in memory is beneficial to software and to Mag 7 because, of course, Mag 7 is spending all the money on this stuff. They're the ones building all the data centers and investing in all this compute power. But we also now see companies like Meta who are turning around and saying there's such good money in that we're going to sell compute power, and SpaceX selling compute power to the government. So you have all these, people are inevitably, when you have huge profit margins and massive potential, competition is shortly behind, and that's what's happening. And I think that competition, you can look at that and say, oh, that's disastrous, or you can look and say that is rotation friendly. That is like, all right, yeah, the semiconductors might chill out for a while, and maybe their profit margins come under stress because people are going to be competing for those, the memory compute selling business. But hey, maybe that benefits healthcare, Mag 7, small caps, small businesses like myself. I've talked about this many times. It's anecdotal evidence, but in our small world, we use AI for all sorts of programming, for building stuff. It helps us to maintain all of our tools. Like, AI is a powerhouse for us. We're not the ones spending money on data centers. So I think about that and I'm like, okay, memory stuff coming down in price. If China's coming to the table, that competition is healthy, I think, for rotation. It lends, cheaper potential access or keeping prices as under control as possible. And I think maybe you mentioned it a second ago, maybe the chart to win them all right now is Apple, because Apple has opted out of spending all that money on building AI themselves, and instead is like, hey, Gemini, ChatGPT, all you guys can just leverage our hardware that we have in everybody's pockets and use your AI in there. We don't want to spend money on all that compute or nearly as much. And the market's rewarding that. I think the market is like rewarding right now what I think is the beneficiaries of AI longer term is not necessarily semis, but rather the businesses that use it. And so I am still a fan of Mag 7, software companies, selectively speaking, like ones that have audiences on their platforms, et cetera. Like, think about Apple. Like, I'm trying to think, what are other stocks, what are other companies like Apple, where they have this huge embedded environment where hardware and people using their platform gives them a huge network to sell into, and may not necessarily be spending all their money on AI. I think Microsoft might, and this is just a little bit of a prediction on my part, Chris. I think they might be the first ones to like pull back and be like, hey, Apple is working over there. Like, we have the similar layout. Everyone's got a Windows computer. Why don't we pull back on this and say, like, we're going to like opt out of the spending race? Like, if that happens, people are going to love the stock again, I think. And might just be like, hey, not spending so much might be the secret way to win AI in a weird way.
I mean, in a way, I feel like that'd be lovely to see, because the SaaSageddon or the software apocalypse, whatever it's being called, it's like, as you just pulled it up, I did pull up IGV. I'm looking out to December, January. I'm like, I might just throw some puts out here around like the 70 handle and just see, if this is maybe how the software play gets a little love. It's a pretty inexpensive way to play it. And also, one thing that happens in tech quite a bit is this type of pattern where the markets create, oh my gosh, I think this might be a head and shoulders pattern. But in tech, a lot of times that is like the perfect liquidity trap to come in and test that low. And then that's where the bid is at. And that's where it's time to get very, very long.
Yeah.
So an IGV, I think that could be a really good trade, which means I don't really want to play it right now at 92, but it's like at 75 or 70. I do like that play quite a bit. So I think I'm going to take that trade. I don't really have the ratio spread doesn't look great, but I think just grabbing I mean, I kind of want to do a ratio spread maybe at 75. Let me see here. So IGV. If I went out to end of the year, which I think there's still plenty of indecision through August, September, midterms drama. It's going to happen. I mean, and if we don't get the get this stuff resolved with Iran, like it's on again, off again, ceasefire, whatever. I'm already exhausted, dude.
You've got a couple things lined up at the same time, right? You have Iran, you have the DRAM worries, the China, is coming back online with AI.
Yep.
Multifaceted, and then the rate hikes, and of course the midterm. So there's a combination. And hey, I think, to be completely honest, I would buy that dip if it gives me one, because I think all those things are passer buying worries. But we'll see.
All right, so I got a trade 80 by 75 ratio spread on IGV. So I'd be buying the 80, selling 2 at the 75. These are all puts. I'd get $1.50 to $1.60. I'd own the shares at 75, but my break-even point with the ratio spread would be down to about $68.40. So that's quite a bit lower. That absorbs a drawdown that's actually below the low from April of this year, and that would be a pullback of lows around 68. So about a 41.5% pullback. If that's a nice little liquidity grab, that would also help me land maybe in that profit trap zone, but see if we get a bid and then we go up. And I can get, if I like that level and I think I want to get long at that level, I can obviously put in just like, a call spread or call spreads. I can put in call options. I can juice that thing up with like a call ratio back spread. There's ways to like get more unlimited profit potential. I'm just not going to guess that, we got to go from here. It's like, dude, if we come back to retest lows, wouldn't surprise me. I think the S&P can still come back and burn off these overbought conditions, and the S&P can come back and try to kiss, 7,000 area. Because I don't know how this to me is. I mean, we could come right back up to the horizontal levels and we test that all-time high at 76.20. This could be just a big flag. If we're making lower highs, this could start rolling into like more of a channel play, which if you go back to like summer 2023 kind of did this, where we had this, 5% correction, a little bit more, ended up being about a peak to trough 10% correction before the market caught that bid late in 2023. And then we had a pretty strong, 2024 bull market with a couple of hiccups. But I don't know if this is, we had months of sideways, months of chop, months of consolidation. Are we about to do the same thing again, where this thing just chops all summer long? And then do we have the, wild and crazy kind of both ways volatility? And we've talked about this. I think this year, especially, I mean, right now the bulls still have the upper hand, and statistically history of the first half of the year being positive shows that it bodes well for the second half of the year. I do think that history is on the market side. But at the same time, it's like there's going to be so many examples where it's like the bulls and the bears are both going to be either making money or being threatened at the same time. I just think this has to be a year that you can make money, like literally either direction. But it's all about managing risk and taking advantage of, like, when the market's giving you profits, doing something with them, because I feel like it's just going to go back and forth a lot this year.
Yeah. No, I think that's a good way of putting it. There's been a couple interesting things I wanted to pull up here on the options side of things, Chris, just to show off some of my tools here. Let me just switch over to my screen. So I'm going to put in a level here on the chart just for context here, and then I'm going to show you what I'm going to do. So I'm going to go here, put that as my put wall. Okay, check this out. So I am looking at SPY. This is the ETF, most notable S&P 500 ETF. I noticed right here, you have a huge cluster of put volume concentration right around the 730. This is out to the, what we've done is we've programmed just the monthly expiration dates in here, Chris, the big ones. So you got August 21st. So out to August 21st, huge concentration of puts somewhere around the 730, let's call it 725 to 735 level. You have a huge level of puts. Now, unsurprisingly, that's going to be right around this major low that we've recently put in. So I think that from a trader's perspective, you probably look at this and say, okay, we probably find some kind of support there. The only thing is that if we don't, that would be kind of your flush off point. Like if you break the 720 lows kind of thing, that would kind of signal what you were talking about, where maybe we're headed to the bottom end of that channel type of thing. So worth watching, I think, is these major levels on the put call wall. tool that we've been working on. It's been kind of fun to check that out. And the other thing I wanted to show you is this net options volume flow here for S&P 500. Kind of mixed sentiment here, a little bit back and forth. We were seeing a lot of put demand, saw some rise in call demand, but we're kind of choppy. And I don't think anyone's surprised there. If you've been watching the S&P, it has been a chop fest, right? Back and forth. And so, impressively, to your point about like the Mag 7 and other sectors kind of rotating in, the stock market has not really budged off of its highs. Granted, a lot of people's portfolios are, tied up in stuff like the DRAM ETF and, the SMH and all these kind of excitable names. So it has been a bit gaslighting, to say the least, if you're in those sort of names, to see S&P 500 down less than 2%. Meanwhile, the DRAM ETF is down at 1.40%. Very quickly. Chris, there's someone in the audience who's been saying several times here that they think that semiconductors are topped out. They are not going back to the highs, talking specifically about things like SanDisk, Micron. I mean, these are good dips, but do you think, and this is my opinion on it, is I feel like as these things crash hard, there's still big winners. There's still a lot of data center momentum. I don't know the future. None of us do. But I feel that the risk reward on some of these things, if you are holding on to the idea of a bull market, like if I'm looking at that SPY level that we just got done talking about, if we come down here, to me, I think you used the expression defined risk trade. I think I'm in the same camp of like a defined risk trade on some of these kind of highly volatile names with a stop in mind. But DRAM, SMH, maybe some individual stocks to the long side, I like that play. I also like IGV. So that would be my take. I think if you come down to the bottom end of that channel or range that you were talking about, I'd probably take a stab at it. And, again, if I'm wrong, stop out, get out of the way.
Well, from the daily side, looking at SMH, look, 20, 30, 40% corrections, it's not unusual. So what I said earlier about some of the like liquidity grabs is, we sell off, chop around, sell off again for symmetry. That's about 40. And then we have the bottom. I listened to an interesting segment. It's 314 Research with Warren Pies. He's strikes me as a pretty smart guy research wise. He's all macro, it's institutional grade stuff. He talked about some of the cycles in semiconductors historically, and we're not near the end. Like if we're still going to see the demand there for this build out, for this, unlimited blank check AI, what is the world essentially committed to all in wise, expect 30+% corrections. But we also could see like SMHB at $1,000. And that doesn't mean that I want to just jump in and blindly buy it. It just means I think there are opportunities to still play the bias. I mean, let's just be purely technical here. Okay, we broke a 50-day moving average. Do we fall to the 100? Do we find a 50% retracement area? Do we look at our just sheer percentage off the highs? Because right now we've had about a 20% correction. Well, I'd say between 20 to 30 or 20 to 40%. I know that's a big drop off all-time highs, but Nick, if we just come back and test like a 144 to 200-day moving average, look, an easy trade in my world is if I got long here and we were below the 200-day, back above it, and I get long and then put a stop loss in, that may have the ability to get back to the highs. And that type of reward to risk is in my favor. And if it goes higher than that, trail it like you do a great job of doing. But you can still line up very good trades. And I don't think the cycle's done. I don't think it's done.
I love that breakdown on that, because again, I think the phrasing you used that I think listeners can easily kind of listen over is you used risk reward within your definition there, right? So price comes down. Yes, it's possible semiconductors go down 90%. It's possible semiconductors, get crushed for the next 5 years. But we're talking risk reward because Chris, myself, you, every single person in the chat listening, none of us know with certainty what's going to go on. So when you are talking about trades, you have to define things in terms of risk reward. And that risk part you can't ignore. A lot of times people, there's the Dunning-Kruger effect where people are new to this stuff. They think they know because they've read an article or watched a video or two that they know what's going to happen. None of us do. What is the only thing that is like wisdom has taught me from trading is you don't actually know what's going to happen. You just make educated guesses, and then you manage the downside when you are wrong, because it's going to happen. It's a lot easier to manage trades that are going correct right off the rip. It's a lot harder to manage stuff when you are wrong, or if you are wrong many times in a row, which also can happen to even the best of traders. So that concept of risk reward is really key. Chris, any thoughts on either precious metals or commodities in general? We've got, you know, a mega downtrend here in gold that I've been watching to see if we can get a break. I do actually lean a little bit more to the upside on gold here at some point, but I'm not holding my breath on it, because it has been pretty persistently holding some downward structure here for a while. Every single time we've come up to this 4-hour downtrend, this looks like it is ready for a break. I just don't know which way. We're looking at a lot of tension right around here, so we'll see what happens.
I think that don't be shocked to see more downside. I'm not bearish on gold. Like we've literally for the last now couple of months, I'm like, I'm through to the downside stuff. I never even played the downside. I don't care if it's going to flush down. I mean, spot price is 4,000. If we go to, I mean, honestly, dude, 3,500. If we go down to 3,000, that cleans out a lot of mania in gold. But what it is allowing me to do, which is even though it's been like, dude, I'm sitting in drawdowns and everything gold and silver, like manageable. It's all volatility drawdown. Not really, you know, my risk isn't there because my strikes are way lower for options. But this is allowing me to accumulate, which is what we talked about the whole time this was going up. I'm like, I just want to start getting dollar allocations or percentage allocations back into my portfolio. While this has been falling, it's allowed me to do that. So if I'm taking any assignment on gold or silver, it's probably going to help me build my portfolio allocation back up to like 10, 15, 20%, which is where I want to be. And I'm also doing it most likely at like a 30 to 40% discount. And if I, you know, if we have a 50% correction in gold and a 50% correction in silver, okay, I'm going to own some stuff and probably be sitting in a small drawdown. But if that 50% tests these all-time highs in the next couple of years, that is a 100% gain on that allocation. And that's why I'm doing it. So I'm not expecting this to be the bottom. It just seems like a random, like, you know, 4,000 is a round number, but I think there's more pain to like flush out the early bulls, if you will. And then we just spend like more time kind of building that base.
Yeah, no, I think if you're watching gold and you have a longer term perspective, and I know a lot of audience members love watching and trading gold and investing in gold. There's all sorts of different people who are watching these types of streams. You got some people who are more short-term focused, some people longer term focused. If I'm looking at the 4-hour chart, look, this chart does not give you not a lot of confidence to the upside in the here and now. The one thing you're kind of hanging on if you're short-term looking for breakouts is that this support level has been pretty persistently holding for now. You're one headline away. Like if you get a ceasefire announcement, if you get another round of bad jobs data, this thing might be forming a breakout. And I actually do like the breakout trade as well, but we are not breaking out right now, right? So when we're talking about a breakout trade, you have to wait. If you are a buy high, sell higher type of trader, which is what I am, I've got to see the higher highs. I've got to see something forming here, and I just don't quite have that. On the longer term perspective, though, it becomes, and again, not financial advice, just sharing my thoughts here. The lower this thing goes, becomes easier and easier for me to be like, yep, just toss it in there and let it sit. Because long term, I think gold's going higher. And long term, I also, I've heard this is an interesting conversation piece that we could go into for a while, but the Iran war, I have heard a lot of the perma gold content creators, Peter Schiff type things. They're saying, the Iran war is actually just straight up bullish for gold. And I actually think that they're right on a long-term basis.
Yeah, I just love how they can say that when it's like every day, it's just like lower gold. It's like, look, dude, they're going to buy gold and spin the narrative to make it sound like we got to be bullish on gold because it's their best trade. And they also are connected to whatever freaking, gold dealers that they work with. And, Schiff's got his own exchange.
He got his own bullion dealer. So I think that is a fair point. Although I do actually think long-term, there is the possibility, and this is the difference, right? Because I get a bunch of people who comment on my videos. They're like, the Iran war is actually bullish. The market's wrong. It's going to rip. Well, Well, in the here and now, the market is not stupid. The market's not just like, oh yeah, no, it's completely wrong. Everyone is gaslit into selling. No, it's and then other people say it's all manipulated. Look, I think the Iran war in the short term is absolutely destructive to the story we have been living with gold. Lower interest rates, lower inflation, both of those things were changed by the Iran war. That's why gold's moving lower. Period. That's like really simple. Now, long term, we are talking about a different story. If we're talking about a period of higher inflation and a period of interest rates spiking, yeah, that's probably going to send gold down in the lower term. But if you have a little bit of a memory on you, then you might remember that's what happened in 2022 that set up a beautiful, beautiful move higher. It's just in the meantime, the Russia and Ukraine stuff, yeah, it sent gold lower for a while. Higher interest rates, higher inflation sent gold. But then ultimately, the national debt rose dramatically and the Fed suddenly started cutting rates again. And I think if you have patience, if you're a longer term player in the gold market, yeah, you might see gold keep moving. But that is possibly another Chris Pulver 3-year campaign trade on silver and gold like you did. So I'm with you on that story.
Yeah. And I think that inevitably, the reason I'm also an accumulator of gold and silver is because inevitably, even as hawkish, I heard this is actually a really good way to put Kevin Warsh as a new Fed chair. He's not really a hawk. He's more of a reformist. He's trying to change the language of the Fed. He's trying to change what task forces and what, how we identify the data that the Fed uses. And it's got to be, present to forward looking, not backwards looking. And I agree with that. Like it's reframing the situation of what the Fed does and trying to get the market off the dependency of the Fed. And I think that's interesting. It doesn't necessarily make him a hawk. It just makes he's trying to reform everything the Fed has become the last 15 years, where the market just expects it to be like, give me liquidity, Fed. Like, where's the backstop? It's like, it's not right. The backstop by the Fed is not 5% lower. The backstop of the Fed is probably 20% lower, 30% lower. The backstop of Donald Trump is whenever the hell he wants to tweet about it. It could be, on again, off again, Iran war. It could be, I don't know if this is real, but I could have swore I saw over the weekend that there was a Truth Social post that said, great time to buy stocks. And I'm like, are you trying to pull like a, April 2025 BS again? So I don't think that Warsh is necessarily a hawk. I think what he's doing is they are setting the runway up for, they're going to talk hawkish, but I do think that this leads to maybe short-term pain of like narrative and hawkishness to get us like the runway where they will go back and be accommodative. I think that this Fed is trying to reframe, I think with Kevin Warsh at the helm, I think he's trying to reframe that, AI is supposed to be deflationary, that AI is supposed to make things cheaper tech-wise. You brought up an interesting point with maybe these companies that have all the spending power, but are like tapping into debt structure ways. Like Oracle is probably the poster child for what to watch. If you want to see this AI narrative break down, Oracle is probably a big part of that, because when they had the first issuance of debt and then Google issued more shares, well, Apple isn't taking the bait. Meta is saying we're going to sell our compute back and we're going to start building our own chips. It's like if they play the AI, like the AI race differently, I feel like they can be rewarded. I just think if it's spend all the money that you've made for the last 15 years and run those cash reserves dry, I think that's where the investors are like, what return are we getting now? Like it's a very different story where it's like you're hemorrhaging cash that was your coffer essentially, and now it's just all in on where's the return. So anyway, long story short for gold and silver, look, we had all-time highs and it was a great 3 to 4 year run, and I think that everyone got excited about it in like a 1 to 3 month window, when real gold traders and silver traders, like, dude, we were long years into that rally, and like it got insane at the end.
Yes,
but we were long well before that. And so that's my mindset right now, is like I'm getting long way before like maybe the next run, and maybe it's when the Fed has to ultimately pivot into something more dovish, and all of a sudden the Fed is just like it's always been doing, cutting rates, quantitative easing, passing the hot potato off to banks. So it's like it looks like they're deleveraging the Fed and decreasing the balance sheet, but it's passing on to all banks to pick up the slack and so keep that liquidity stable. So I don't think we're that far away from the Fed doing exactly what they've always done, which is trying to be accommodated in some way, shape, or form. They're just talking a much different game right now, but I think it's the reform that Kevin Warsh is hoping to bring to the Fed. So again, gold, silver still to me worth having in the portfolio. Just for a short-term trader, that 4 hour chart you have, it's great. Just don't force trades unless that structure is giving you confirmation, because it's still bearish. You've got support, but if that support breaks, don't be surprised to see another flush lower.
Yep. And last thing I'll say here, and then we're going to toss the show over to our next host, who I'm not exactly sure. We're having a little bit of a back end figuring it out on terms of our schedule, but we'll have somebody on here in a second.
Okay.
Last thing I'll say, gold silver ratio. So just for context for listeners, Chris and I, we've been streaming, together for a number of years. During this whole 2022, 2023 period, Chris, you were very much favoring the silver side of things. And ultimately, that's sort of what happened, is like silver massively outperformed gold for a while there,
right?
And has completely reset. So that was kind of it took some time, but this is where, a lot of people love trading the 5-minute, the 15-minute chart. Sometimes the beautiful moves take place on the daily and weekly. And you just have these really nice, opportunities where I remember, I have vivid memories of you coming on the stream and being like, yep, I'm just building into it. It's boring, but I'm building into it with the silver play. And then all of a sudden it was not boring at all. It was like everybody's focus was on silver.
Right.
And here you were, you were scaling out of it. And that last part, it was like a big chunk of the gains, and that's maybe something to take away from.
Well, and I feel like I didn't trail that nearly well enough, because like once we had that first hiccup in October of 2025, once we got back to those highs, that's where my trailing stop loss went in. So I did ride that up a little bit longer, but I did not get that just that tail end capitulation. I was probably left 20-30% on the table, which for what it is, it's still I turned silver into like a 200% move on like a 4-year base. So it's
still
like, it
a
was
monster
pretty good.
winner.
Yeah, it was pretty good.
Yeah. Chris, we're over time here, so I'll let you go. Thanks for coming on as always. And we will see you on the next one, man.
Sounds good,
for
man.
anybody, yeah. Thanks for coming on. Anybody who wants to check out Chris, check him out on his YouTube channel. It is Chris Pulver Trading, I believe. We've got that posted up on the live stream schedule, and we'll see you on the next one, man.
All right. See you.
See ya. Up next, guys, I'm not exactly sure who we have. We have a new stream schedule software here. It's still using our calendar on the back end, but we have a little bit of a surprise. I don't know who's it going to be. It's either going to be Marco or Alan. I think it's Alan, but I will stick around just in case we need I need to hop back in, but we'll play a quick break. And then up next, we have somebody coming on. So stay tuned after this quick break. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live. That's A1 Live for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream. All right. Well, still me for a second. We're still figuring out our lineup. So we started something today. Pretty cool. We started something where we're starting the stream a lot earlier in the day. So we're going to be actually doing, it's like, I guess it's middle of London session or towards the tail end. No, I guess it's like middle of London session where we're going to now be starting the streams. I made I made a cool observation this morning. I was brushing my teeth, getting ready to head out to the office and watching Marco's stream, which was awesome because it's like, hey, this is it's a team effort here. We got a great crew of traders here behind the scenes, adding daily analysis and commentary. So pretty cool stuff. Anyways, I think we now have figured out our lineup. So we've got, I think it's either Alan or Marco or both. We've got another awesome segment coming up. So I'll pop out of here. You guys got it from here. Thanks and sorry for the mashup. It's all good now.
Yeah,
No worries. What's up, man? How you been?
Hello, I've been pretty good. What about you?
Pretty good as well. Let me go ahead and flip my screen sharing on here. What are you watching this morning, Marco?
Just a second. Let me see where my screens have gone. So let's put up my screen. Okay. So did you already have a segment?
I did, and I think you did as well.
Yep. To be honest, this morning I am kind of patient. So I'm patient because I'm not exactly sure. Do I want to stay with if you guys have been following me for a while, you would know that I have been bearish on the dollar. So I'm not sure if I want to stay bearish on the dollar, stay with my whole risk on team, because I did get burned last week, or if you want to flip and buy the dollar in some currency pair and actually completely flip. So my thinking is the strait is now closed. Oil is climbing up, so it could hit 100 in 2 weeks, let's say 2-3 weeks. Inflation, if we look at the edge finder, so inflation did trickle lower in the last print from 4.2% to 3.5. Okay, but if oil stays elevated, I think inflation can easily go back to 4 and even maybe 5%, which, looking at the Strait of Hormuz crossings, it looks pretty bad. So it seems like the crossings are back near zero. We had that spike up in June, which did provide some sort of, let's say, reduce some pressure. So inflation went down, but now if the strait is closed again, it's going to get reflected in the inflation print sooner or later. But what do you think about this? So am I wrong? Am I right? Is the Strait of Hormuz important any longer? Did the spike in oil, was that just because of panic? Was it because of the strait? Have you appreciated enough in the oil price? I went to fill up my car today again, and the price of diesel definitely went up. So it was down to, I think, 1.55 euros per liter. Now it's back to 1.6, and it used to be 1.8, 1.9 at the peak of the oil price spike. So a bit confused there, and seeing if I can pivot. If I do pivot, and if I'm right, I could catch another trend right at the beginning. But if I'm wrong, I'll be pretty mad because because I've been blabbering on about the weaker dollar for weeks now.
And then the second you pivot out, that's when it starts to really show up.
Usually that's how it happens, right?
My thoughts. One, it's so dang annoying. Like, I want this to be over. Like, either there is peace, or you go pedal to the metal and you guys fight it out. And you know, like that's kind of where I'm at right now. It's definitely annoying. I think it's a little too early to tell whether it's one or the other. You have your concern is very valid, right? So we saw lower prices of oil in the month of June, and that translated into your CPI and PPI coming in cooler than expected. Also, Canada's CPI came in cooler than expected just 30 minutes ago. So you're seeing that across the board. And you also have other major economies as well this week printing out their own inflation reads. So I'm curious to see how that reflects across the board. But nonetheless, lower oil prices did actually translate into cooler CPI prints or cooler inflation readings, meaning if the opposite is true, where you have oil rising higher, that would also probably likely increase the inflation print. So it just walks back everything that we've done. I think that it's probably too early to tell right now whether this is truly elevated oil prices back again, or if this is just a pullback and then you have bear step in and take it lower. So reason being, this oil move right here that we saw in June, one directional, almost no pullbacks. And so you're starting to see one now. You're getting a pullback into this level of support when the war was going on, possibly turn resistance here in red. And from a Fibonacci retracement perspective, you also have, you're tapping into the 61.8% retracement level, which lines up right with that level of resistance. So if you do have bear step in and take this lower, and this is just truly a leg higher before a continuation lower, then in that case, maybe you can hold on to the cooling inflation story. But if you have oil stay higher here and it just stays sticky, or maybe it even breaches the 61.8% retracement level, and at that point, from a technical perspective, the trend is no longer to the downside, it's been invalidated, and you're back above this in this range here, then yes, it's probably wise at that point to go long dollar. So that's how I'm kind of interpreting everything. I think it's too soon to tell. If you just look at it at face value, you tapped into the level and it's getting a rejection to the downside. So to me, I'm happy because I'm on the same boat as you as well, right? I kind of prefer, or I'm positioned for a softer US dollar. In the event that you do have oil tick higher as well, dollar CAD looks pretty good, right? I'm looking for a pullback into 1.395, but maybe we don't get it that deep, right? In that case, I think it's still wise to, in the event if let's say hypothetically today, oil breaches that 85 mark and you have a strong dollar and you have something in the Middle East pop off significant, then you can just pile into dollar CAD and then continue and just target maybe this recent high or even above if it's really that bad. I think there's no harm in getting into the V-shaped recovery as well with dollar CAD. So ideally at 1.395, anywhere here. But if things start to take a U-turn and you start to see higher highs, higher lows, then it makes sense to the upside. And then at that point, it just brings me back to euro dollar as well, continuing that same old trade. I mean, this thing has been pretty flat for a while, right? So I would imagine that if you have a strong US dollar really come into the picture, you have this level of support, just fold lower, and then you can target 1.13, 1.12, 1.11, et cetera, depending on the severity of the situation. But I think you're in a position where everything is at a standstill. The dollar index is at this trend line and at this level of support. The gold story is at the apex of this wedge, right? You either get a break lower or break higher. Everything is at a standstill right now, in my personal opinion. My good old dollar Swiss just hanging out there, not doing anything. I mean, I just talked about this euro dollar not doing anything. It's just at this level. So I think the market, not just us, but the market doesn't have a solid directional call. If you just look at where everything's at, everywhere is kind of just hanging out there, waiting for something to happen.
Yeah. I would say I do agree. And something that's super interesting. So I did a poll during my segment for gold.
Okay.
I told people to tell me if they are bullish or bearish. We had 30 comments. I think 14 were to sell and 16 were for buy. So essentially a 50-50 split. So the crowd, the viewers, are completely split when it comes to metals. Edgefinder is neutral. The chart is neutral on gold. The chart is stuck at the 4K level and below the 200 EMA. So I'm just seeing a lot of uncertainty in the markets at the moment. I'm seeing people waiting on the sidelines. My best advice would be, if you're trading gold especially, I would be patient. Just everything is signaling flat, neutral to me. Everything is signaling that there is no clear bias up or down. If we break some key levels, that's fine. But if we don't break those levels and just continue staying above 4K and below the 200 EMA, I think you're going to get chopped up. Like, I'm doing my ChatGPT experiment where I get daily trade signals from ChatGPT. And on gold, it took like 3 or 4 consecutive losses just because of the chop. It took winners on Forex and on the S&P. So it's still up in a period of a few weeks, let's say. But if it wasn't for gold, if it kind of knew to stay patient in the chop, basically it would make a lot more percentage. So don't be like ChatGPT and don't force setups on gold unless you get a clear break of the level. And like today, I put a prompt into chat and I said, do you want to take a new trade on gold? And basically even ChatGPT said, no, I don't want to take any more trades because we're clearly stuck inside of this no man's land. Right?
Really?
So even ChatGPT can learn sometimes. Yeah. So it's pretty fun.
It's pretty funny. I think I can speak for everyone that this whole situation at this point, a couple months into it, has been a pain in the you-know-what, you know?
Yep.
And I would imagine that a lot of people, sophisticated, way smarter than us, are also feeling that as well. And I'm sure there's a lot of dry powder out there waiting to be deployed.
Mm-hmm.
So I think there's a opportunity on the horizon. I don't know if the war ends today or a month from now or 2 months from now. But if you just look at the charts and the macro objectively and say, it really just takes a couple variables: the oil price, yields, and the dollar. If you're looking at gold, for example, to make a directional call. And the truth is, we don't have those stars aligned, so there's really nothing you can do. If you are itching for something, maybe you can buy gold right now. Not financial advice, but just buy it right now and be open to make this a longer term position trade. If you think time horizon wise, this is going to be a 5-year play, and that in 5 years you would imagine gold is back up to all-time highs, then maybe this is a start of a campaign for a longer term thing. If you want to scratch that itch, for anyone in the audience watching is like, I can't do anything right now. Well, maybe you can start something long term, right?
Yeah.
I'm gonna pop this up here. Not financial advice. Not financial advice. I don't know if it went on there or not. There's like a little. So I don't want to mess nothing up.
See much.
James has some magic where he like pops something up and it just goes on the screen, like not financial advice. But yeah, like if you want to do there it is. If you want to do a longer term campaign, then maybe that's the way you go about it, right? You can buy gold here, have another open order at 3,000, and then all the way at gold at 95. However deep you want to go, that's how you can play it. But for now, there's really nothing to be done. I wanted to look at COT because I haven't looked at it actually since it came out. So this is me with a fresh pair of eyes. Out of curiosity, Nikkei and Dow doing quite well. The pound is still doing quite well from accumulation standpoint. Marco, I'm still kind of looking for an opportunity going pound long. I think a lot of you guys are pound long too. Did I miss something? But I think a lot of you guys are long the pound. I want to pull back into this 200-day moving average. We haven't quite got it yet, but the pound basket is doing quite well. So that's something that I'm looking for. Maybe I can play the minor currency pairs to kind of take away some of the US macro and just start to play something like that. So if I go to minor pairs and I just look at pound only, and for anyone that's here in the stream brand new, this is the Edge Finder. So if you want to look at potential trade setups while considering the fundamentals, the sentiment, and the technicals, this does it for you. There's an algorithm that computes all of these data points, whether it be crowd sentiment, commitment of traders, GDP, PMIs, retail sales, inflation, everything. It just does it for you in real time and compares it against each other. That way you're not guessing. But what I'm getting at here is that if you just type in GBP, which is the British pound, you can see every currency pair where the pound is in. And you can see here that you have pound Swiss bullish, pound yen bullish, pound CAD bullish, pound Aussie, borderline of a bullish reading at a neutral reading of 3. So you are seeing some pound strength coming in. And so maybe that's one way I can kind of diversify here. I know we've been talking about pound Aussie and pound Kiwi. Has your thoughts changed on any of those, Marco? Pound Aussie or pound Kiwi?
I kind of don't want to touch the NZD, especially not to sell it, because I got burned 2 times already. So I took 2 losses playing the NZD. I think personally I'm leaning more towards an escalation and a continued prolonged closure of the strait, which means that inflation goes up, which means the RBNZ actually can be even more aggressive than they are now. So I don't really want to mess with the NZD at the moment. I would much rather buy the dollar and buy the dollar against something that's weak, but I can't find anything. So if you have something that's clearly weak, as far as currencies go, I'll be happy to hear it. But I'm looking at the yen. The yen I'm actually bullish on. New Zealand dollar, I don't want to touch because I think it's going to be more bullish according to my recent thesis. The pound is already producing a lot of strength. Political situation seems to be improving. Do I want to sell into that? No. Euro may be a potential candidate. Aussie, could be a potential candidate. The CAD, I think, definitely. So I think actually buying USD CAD seems like a good way to go, especially as it sold off quite a lot. So to be honest, yeah, I think I just came to the conclusion that USD CAD should be the best.
That's a tough one. I think so you want to buy USD, right?
I want to buy
have
dollar.
Have that in the back of your mind.
Yep.
Okay. You had so obviously dollar CAD, if we're looking at this, I'm going to do this. I'm going to take away this recent price action. If you just look at this right here, this is all strong USD and weak CAD fundamentals. Then you move the chart here a little bit more, and you have you're starting to see some weaker US fundamentals along with one strong Canadian print, which is that jobs market print, right? Which the speculation is that it's overinflated because of the World Cup, and it was just a bunch of part-time jobs that are not going to be around come next month because now it's over, right? So that was the whole speculation with the Canadian jobs report.
And it's not just that.
If you look at it holistically,
the dollar lost value because inflation went down in the US.
Right.
That
so
was,
you
I
have
think,
those forces.
The biggest part. Yeah.
Yeah. You have those forces. But if you're trying to, I guess, hedge on the idea that you have a strong US dollar, then you want to look at the other side of the coin and say, well, Canada's still in bad shape. They only had one jobs report that came in well. If you look at everything else from a holistic standpoint, they're still in bad shape. In fact, even this morning, they had a CPI report that came in cooler than expected, which is dovish, right? So that's going to weaken Canadian dollar. So yeah, I think that dollar CAD would probably be a good candidate, whether it's the pullback into this level or you get a V-shaped recovery. I think that's a pretty good spot.
Yeah.
Someone says USD CHF. Don't tell me that, man, because I'm short USD CHF and I've been holding on to this thing, just doing nothing. So
I wouldn't really mess with the Swiss. I wouldn't really buy dollar Swiss. I think it's the Swiss is pretty strong. So
I'll say this though, being honest with myself, the guys here in the chat are being true. There was something not yesterday, last week or the week before, where Swiss National Bank said even at this current price right now that they want to weaken it even more. Yep. So I'm shorting into this longer term level of resistance here, but similar to DXY, where you had this long term level of resistance at 100.5. If you get a breakout above that, then you can go to the next zone, which at this point with DXY was 102, which in dollar Swiss terms, the next zone, if you get that breakout of that long-term resistance, could possibly be like 0.8200 maybe. So yes, this level of resistance holds, but if you get a breakout, then maybe you got some follow through to that. So that's another thing to be looking out for as well. Dollar yen, it's tricky. I'm not going to talk about that. And euro dollar makes a lot of sense as well. If you want to just straight up trade the DXY as best as you can with the biggest correlation, then euro dollar would probably be a good bet as well too.
Yeah. Although USD CAD had a pretty good correction, euro dollar not so much. So euro dollar is literally sitting at that support level. I like the technicals with USD CAD a lot more. Yeah, this can retrace all the way to the ATH or the recent ATH. So USD CAD, I think it's also sitting at a 20 MA. Probably is. I'm going to look at my chart right now. Give me 1 second. So let's look at USD CAD. No. Okay, it's far below the 20 MA. Doesn't matter. I still think it's a pretty good level. The carry direction is a buy, so positive swaps depending on your broker. To be honest, I trade CFDs, so whatever the swaps are, the broker charges me a negative 1%. If it's positive, it goes negative 1% on that. Or is it 0.5%? No, I think it's 1%. Yeah. So if I'm supposed to get 2% in positive swaps, I only get 1% with CFDs.
That's pretty standard in the US as well. Most like regulated Forex brokers, they have where they label it an admin fee or whatever. It's just a markup. Though usually low, it's still there. So I don't think anyone's really trading at a raw.
You can through IBKR, you can trade pure currencies but I'm not sure how much they slap onto that. I know for CFDs, that's the rule, 1% extra commission.
Okay.
But if you trade pure Forex, I think it's supposed to be pretty clean. Except for that, you need a huge account. I think there's a minimum quantity you can put in, and then you need to have 100K in your trading account. Like anything less, it's not going to work out well. I think that's how it's set up. But let me ask you this. So if you had to give me an answer today, what do you think happens in the next 3 months? In the next 3 months, is oil higher than this level? Is inflation higher, above 4%? Is the Strait of Hormuz closed? Are you an optimist or a pessimist? I think you're more of an optimist, but I want to get your take. It's tough.
Yeah,
I do have an answer.
Because it's tough because, like, the market has been dealing with this for how long now? You know,
yeah,
140 days.
Yeah, it's almost half a year.
And you know what? Like, we've already seen oil at 119, so who's to say we can't do it again?
Mm-hmm.
Right? We've already seen what that looks like.
Yep.
So I think 3 months, man, like, although I want it to be over, it can drag for 3 months. You know?
Yep.
You got midterms coming around. That's definitely on top of mind. You know, that's one kind of leverage point that Iran has, but Trump doesn't give a damn about that, apparently.
It seems so.
So
I would have guessed differently, but it seems like he doesn't care.
I honestly, like, although I want to be optimistic, I would rather prepare for the worst case scenario and say that you probably do have, it's possible that you have oil above 85. Yeah.
Yep. I think oil could easily go back to 100. Maybe not stay there, but hit 100 and then move back to the bottom of the range. 85, as you said, pretty likely. So personally, I would say Strait remains closed. War lasts a lot longer than people expect. Inflation goes above 4% probably, and the Fed actually does turn hawkish. I think that's how I'm seeing the situation. Although at the moment I don't have enough clarity or conviction to put on trades according to that opinion. I think I still need to see something. I need to read about something or see a confluence somewhere, and then I'll probably start putting on size. Like for me, my opinion is for this year, you would make money if you just learned when to pivot from risk off to risk on. Like if you went into massive risk off at the start of the war, you made money. If you then went into risk on when the Strait was open, you made money. Now Strait is closed again, so if you flip to risk off, probably make money. Which means, by the way, for the viewers, risk off in this scenario, it's different for many scenarios, but in this one, it means dollar goes up, stocks down, Bitcoin down, gold down, silver down, pretty much everything else is down against the dollar. And there's nowhere to hide than maybe in the US dollar.
Yeah. Ideal positioning for me would have been this. This would have been like I would be chillaxing right now. If buy dollar somewhere here. Buy dollar here. Get this appreciation.
Okay.
Stop right here. In case if the trend changes, then that's it. You're out. And who cares if price does this? Because at this point, I've caught some appreciation and I'm just collecting positive swap for however long it takes. 3 months, 4 months, 5 months. That would have been ideal positioning. But because I have basically, like, I liquidated dollar longs like somewhere up here, man. Like when we tapped here and now I'm fresh. So now that changes everything because now I have to make a directional call if I want to get any appreciation as far as like capital appreciation. And then depending on my direction, you could either pay positive swaps if you're short or get positive swaps if you're long. So that would have been ideal positioning. I think a lot of people are probably in the camp where like they're in this area as well. Like they're not bought all the way down here. I think there's a lot of dry powder in the market. I think it's a lot of dry powder. And because it's so tricky to make a call one way or the other, you're not seeing follow through in moves because the headlines mean nothing now. They mean nothing.
Yeah. Pretty much. And to be honest, I'm definitely surprised that Trump doesn't want to like make the situation better until the midterms. I wasn't expecting it, but it actually does seem like he doesn't care that much. I think he would benefit from Republicans winning most of the seats. And right now, as far as I got from like some polls, which are of course inaccurate, but I think people want more Democrats. I think they're kind of done with Republicans, especially with this Middle East stuff and inflation going up and gas prices going up. But, you know, at the end of the day, it's also about the SPRs, the reserves. Have you read about that? Like the reserves are supposedly running out. The oil reserves that are keeping the prices a bit lower, let's say. So the reserves are supposed to last for 3 months, I think. And 3 months have passed a long time ago. So maybe it's 6 months. I'm not exactly sure. But they are running out of the reserves. And once they fully run out, which I don't think it'll happen, I think they will stop putting them out before they run out, just in case of a worst case scenario. So oil goes up even more. You know, those reserves are meant to keep oil prices lower. If that supply runs out, oil goes up even more to 100, probably, maybe even above. So right now, this week, I'm seeing more risk off, more reasons to go risk off than any other week before since the opening of the Strait.
Yeah, it's tricky, man. That's why I say, look, both sides are clearly bleeding, right? Like they're hurting on both sides. Fight it out. Who's the better fighter? Who has the stronger military? Fight it out, get it resolved, and it's either it's open or closed. That's you know.
I know what you mean.
Yeah,
but looking at the past events, like the Middle East can hold out for years. You know, they just dig a hole and they stay in the hole for years. It's not a good scenario. But I'm just a guy on the internet. Like I watch some Discovery documentaries and that's it. I don't know nothing about geopolitics. I'm just blabbing about stupid stuff.
Neither do I, man. Neither do I. But yeah, a lot of people, I would imagine across the world, but a lot of people, whether you lean right or left, are pretty exhausted in the U.S. domestically. Kind of like, come on, man, like, come on. So
yep.
It's not a good look for us. I would imagine it's not a good look abroad as well, or even for the Iranian side. So
yeah, it's a bit of a shit show, I would say. But the one,
which again probably holds no weight at all. But I think the U.S. went heavy this weekend as far as attacks goes. Who knows, right?
Yeah, I did something about it. I did see something, yeah.
But mediators proposed a 10-day ceasefire strike. Like, again, stop with the 10-day, 5-day ceasefire. You know what I mean? Either you're done with it, or again, fight it out. Let's see what's up. So
yeah. I think one of the issues for Iran is no one knows where's the head and where's the tail. It's like a bunch of people, they all think that they are the main guys, and then they're all spitting out different facts. And then one guy does a peace deal and the other guy sends 100 rockets. So essentially it's like basically the wild Middle East.
And then on our side too, same situation. We have us trying to maybe cool things down, and then Bibi comes in. And he also disrupts any progress there.
Same thing. Super complicated. One thing that I know, if you are a geopolitics expert, you probably would have made a lot of money in the last few months. So you would benefit definitely. But one thing to hide out in is my bullish yen idea, which is like watching paint dry. So it's doing absolutely nothing. I now know why Japanese people live to be like 110, 120, because everything is so freaking slow in Japan. So if I put up my screen, the idea was in Swiss yen. So the idea was to sell Swiss yen as a long-term bullish bet on the yen, with the thing about the pension funds selling foreign, buying domestic, basically selling US bonds, buying Japanese bonds. The effect is yen gains a lot of value, dollar loses value, pretty much yen gains value across the map. You can sell USD/JPY, but you would probably get eaten by the swaps. So the swaps would be extremely expensive. Swiss yen, though, swaps are neutral or maybe even positive depending on your broker. But we just are doing nothing. So we seem to be stuck at this level of support. I want to see a break of the support level, which I'm not really getting. And we seem to be stuck in this area. So I'm not sure what's happening. I think this idea is going to take maybe 2, 3, 4 months to play out, if it does play out. Hopefully I can, if I do execute it, hopefully I can collect positive swaps. But yeah, pretty boring idea so far. So there's very little places to hide out from the Middle East. This should have been one, because it's not really impacted by the Middle East. It's mostly impacted by the pension funds. It doesn't seem to be moving much. So yeah, I just wanted to put that out there.
Yeah. I'm thinking another place you can probably hide out in, Marco, is crypto. But then crypto's not doing anything either. So that sucks.
Yeah, crypto did show some relative outperformance. Last week, it showed a little bit of relative outperformance to the other risk on assets, but it's just not doing much. It's just flat overall. So
like it's definitely more reactive to like Japanese bonds than it is the Middle East.
Yeah, that is something I don't know much about, but maybe you can talk more about it.
Yeah, like a lot of people, like similar to the carry trade in with USD and Japanese yen, where you can essentially borrow money at relatively low cost and just park it into a higher yielding asset. People would do that with Bitcoin, because it's, well, at one point it was considered a super high yielding asset, right? Especially if you were under the mindset that it's going to hit $1 million or something or whatever, right? Big crazy upside until recently. But a lot of the big moves here in Bitcoin were derived from things happening in the Japanese bond market. And things happening means essentially unwinds, right? So whenever yields would spike heavily, that is implying maybe some fiscal tightening in Japan, lifting interest rates or whatnot. And so that diminishes the spread between, in the example of USD/JPY, the spread of interest rates between the US and the yen. So if that's our scenario, that unwinds the carry trade in that sense. With crypto as well, if Japan starts to raise their interest rates, well, the arbitrage opportunity becomes less attractive. It doesn't go away per se, similar to USD/JPY. They just hiked their rate by 1% to 1%. The US is staying still, so it narrowed a little bit. It doesn't just completely erase the carry trade, because there's still a decent spread there. But that risk of them heightening or tightening a little bit does make the arbitrage opportunity less attractive. So like usually these big moves here have been Bank of Japan scared, or not Bank of Japan, Japanese bonds scares, right? So which, looking at them right now, they're still kind of tricky, right? So I think that's another thing that's kind of pressuring, just keeping Bitcoin under pressure, is that yields in Japan are still elevated. So, but I would say that it's less sensitive to the war in the Middle East and more sensitive to the Japanese bond market.
Just a second, I'm gonna send Tiger the link for the stream.
Sure.
Let me just do that. Copy link.
And while you do that too, I think one thing we can mention here for all of the new viewers out there as well, we do have a sponsor here for the stream. It's called 8cap. They're offering a 20% welcome bonus for a limited time. make sure the firm is good for you. But again, a 20% bonus is not something to ignore. So I'm going to put that into the chat there for you guys. If you are looking for a new broker, perhaps ACAP is the right fit for you. I believe it is available for everyone except for the US. So go ahead and do your due diligence on that.
So I think we have 1 more minute until Tiger comes on. So what I'm seeing from our talk is you're a bit more patient as well. You're waiting for a new catalyst, waiting for a new development. You're not yet sure if it's risk on, risk off, dollar up, dollar down. So same boat as me. What do you think is the next catalyst that we need? Is it the Fed next week? Is it another escalation, de-escalation in the Middle East? Or you're just letting it run?
I think it's Middle East. I think Middle East trumps what the Fed's gonna say. Like, let's say like the Fed right now, they have a press conference today and they say, okay, we're gonna be dovish. Yet the following day, you have something pop off in the Middle East where you have oil break above this level and it's back to 105. Well, who cares what they said yesterday? That's what it is. And if it stays there, what they say means nothing. So I was going to ask you before we pivot out here, you asked me kind of my price target 3 months out, right? Or like scenario wise, is the Middle East going to be done with or continued 3 months now?
Yep.
I'm going to ask you the same question, but on a shorter time duration. So in the next 2 weeks, do you think that oil right here, this pullback into this level of resistance where the 61.8 hangs out at, do you think bears come in and take it lower from here? Or do you think that there is not enough sellers in this market and you have oil back above in this kind of war zone choppiness here, this area? So 2 weeks from now, is oil lower than the 61.8% retracement level, or is it higher?
I would say higher. Just looking at the logical outcome, straight is closed. Oil is going up, slowly creeping up higher. We have been at 120 at one point on oil. We should go back at least inside of this range, so above 85, below 120. We should just go back into the range. And inflation, I think, is going to go up. I think it's going to go up. Not in the next 2 weeks because we get no prints, but I think oil goes up above 85. Yeah, and above 88 maybe. Will I trade that? My conviction is still not that high. I don't think I want to start putting on positions according to that conviction, but I'm leaning to that, man. I'm like I said, if you can pivot, if you can be the fastest, if you can be the first one to catch sort of a move, you would make a lot of money. So buying the dollar at the moment, if oil goes up, you can make a lot of percentage. USD CAD looks pretty good.
Okay. So your bias is in that direction. You're just waiting for a little bit of more signs, maybe technical signs or whatever, to point you in that direction.
Yeah, I just need one more thing, like maybe to read something on Twitter or to read a newsletter, something to get me going and to make me commit. Or maybe I can just do a hedge against some of my risk on positions, some of my stock positions, and buy USD CAD. You know, it's going to be a hedge against risk on, so why not go in with 0.5% risk? Doesn't seem such like a bad idea.
I was going to ask too, would you then, are you open-minded to just directly trading oil, whether it be from an ETF standpoint or through, I don't know if the DNA Funded offers that as well from a prop firm standpoint, like trading just oil? Or no, you wouldn't do that?
That's a very good question. It's a very good question, and I definitely thought about it, but I would rather do the dollar because dollar has shown so much resilience lately, and things haven't been going up against the dollar. It just had so much strength. So I would rather play it through the dollar, and there's a lagging relationship. So oil, it's kind of maybe even too late. Like the amount of move you can squeeze out is very little, I would say. But on the dollar, there's a lot more to squeeze out because the dollar should lag a bit behind oil. As oil has moved, the dollar should buy into, or let's say go up a bit in the next 1 to 2 weeks.
Sure. Makes sense. Makes a lot of sense. I was just curious on that.
Though. Yeah, good question.
Well, Marco, thank you for the conversation. This was fun. So we both had 2 segments here today. So for anyone that's new here, you'll see a lot more of us. So one session in the morning, via or within the London session, and then going into New York session, you will see us again. So Marco, thank you for the conversation. We have Mr. Tiger Berry coming in, so show's not over yet. We'll transition over to him, and we'll see you tomorrow, Marco.
See you tomorrow. Thank you. Goodbye.
All right, man. Have a blessed one. Bye-bye.
You too.
This next
Bye.
segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Monday. Hope you guys are liking the new format. Get some more love to Euro areas there around your lunchtime, I guess it would be. Having our guys start a little earlier, some of our European guys over there. So hopefully you guys are liking that. I feel like that might be a good benefit for you, getting a little bit more analysis in. That way you've got a second half of your trading day over there to take some of that advice, some of those levels and things that the guys are giving you to heart, and maybe utilize it for the second half of the day. So hope that's a good thing. We'll definitely keep that up. And yeah, ladies and gents, let me say it's going to be a little bit of a slim pickings week when it comes to data over here, especially in the US, because we've got this many red folder events. 0. Absolutely 0. In fact, the biggest thing that for the day, of course, was already the Canada CPI numbers, which came out soft to kind of follow that trend, just like the US had a week ago. And the biggest thing I'm watching is really probably the Euro rate statement coming out on Thursday. So that'll be something to definitely pay attention to coming out. And CPI for the pound, employment numbers for the Aussie. And then, of course, CPI for Kiwi, which, by the way, the Kiwi is now the leader on the fundamentals, because we just had the Canada number come out, the CPI. So it was a bearish box. Went from 85% all the way down to 71%. So it's now fallen off the lead. And when we take a look at the currency strength, just of the 8 majors and a few others in here as well, again, the Kiwi as well as the yen are now tied for the top spot with the euro right behind it. So there's your current leaders from a fundamental perspective. Again, just looking at the higher impact economic calendar releases, the red folder events. And with the Canada falling from grace, it went from 85, it went all the way down to 5th. So 4th among the majors, but 5th when you include the yuan in there. So still fundamentally strong, just not as strong as it was an hour and a half ago. So that's the strong side. And then the dollar, remember, is down here in the basement, partying it up with Australia. So that is a look at your strength and weaknesses as far as the majors go, just from a fundamental perspective, which of course is the why to get into a trade. So as always, let me know what tickers you guys are looking at. Why yen top? Well, let's go have a look. Let's go see what the Japanese yen has for us over here. Taking a look at their heat map. Shubahamaheta. Hopefully I said your name right. This is why. You've had one negative report. That's the manufacturing sector. Other than that, you've got a whole bunch of bullish readings on your PMIs, your inflation numbers, some spending, household spending numbers, got a neutral box on the GDP and unemployment rate. So yeah, it's just the way it shook out. Very, very dynamic list, guys. With every day, we have box changes depending on what data sets obviously beat or missed forecasts or just hit them on the head for neutrals. So, yeah, if we're just looking at some of the top headline red folder events, Japanese yen, number one. And this is why. A bunch of bullish boxes towards the latter part of June and the early part of July. So, looking to get some more data from them. It's been quite a while since we've had anything major come out of Japan. Really, the last one was that, let's see here, July 2nd, July 9th. Yeah, it would have been the PPI, and that was all the way back on July 9th. So here in the next week or two, we should get a new wave of Japanese data to see what's up. Yeah, that's just the data. It's the way it shakes out. So when we take a look at the top setups, my favorite pairs right now, guys, are the pound dollar and the Kiwi dollar. Right here at a +7 and a +9 for the pound dollar. So we'll definitely get a look at some of those, just taking advantage of the strength of these, of the pound and the Kiwi relative to the weakness of the dollar from a fundamental perspective. Again, it's exceeded on 40%. So it's basically down there to that section where I personally look to actively start looking to short something. And like I mentioned last week, though, a lot of these trends were very strong for the dollar. So some of them are finally starting to curl back around to where we can actually look at some buys as far as the way I trade zones. So if we go back over here to the chart, we take a look at those two currency pairs specifically. And then I saw S&P on the list. Somebody was asking about S&P. Yeah, we'll take a look at that in a second. Just from a quick hitter on S&P, it is, I think, neutral. I didn't see it on the list over here, unless my eyes deceived me. My eyes deceived me. There it is. It's +6. So there we go. We'll take a look at that as well. So let's go pound. Well, let's go. I'll tell you what. Let's go S&P first, since that was the first one on the list in the chat box. So, looking at the trend over here, it has definitely gotten kind of ugly, guys. Kind of choppy. And I drew this up, I think, last week. If in my perfect world, I would want to see what this yellow projection line is doing. I'd love to see a break and close above this swing high point here. I put it that high, but as long as I get any type of break, obviously the higher the better, because that would show we have some strength in this underlying move. It takes a lot of money, remember, to break structures. So I first, for that +6 rating that we're seeing on S&P, I personally want to see this break and close first. And then if and when that happens, then we wait for a retracement. I wait for a retracement to a demand zone that's not been created yet. So there's still work left to be done for the S&P for my taste. But this is the first step. Let's break and close up here. If we do that, then I'll start perking my eyes up or my ears up or all of it, perking everything up, okay? So nothing I can do right now. I'm just going to sit back on my hands when it comes to S&P and look for this move first right here. Let's get that. Break a structure. All zones I buy have to break a structure. Either break a structure or break a zone, because that tells me there's got to be some underlying strength somewhere in this would-be impulse move. Just like that. Impulse moves are formed when they break structures like this. So I can't do anything yet. I got to see that first. So hope that helps, because all we've gotten so far, basically, if you go all the way back to the middle of May, we're still technically in this, within this bearish impulse move. If I can get my thing to work here. Here, let's do this. I'm still looking at this in context of this bearish impulse move. Have we broken that yet? Are we still within the parameters of this bearish impulse move? Just looking at the trend, looking at the charts, we're still within it, right? We haven't broken it. So until we break that structure, I'm sitting on my hands. This bearish impulse move broke these major structures down here, and everything else has been created within that range. We bounced into a supply zone at one point, a daily supply. We got a little bit of a push down, but it's just pretty well equilibrium. Just looking at it on a grander scale, especially since, well, during the last 3 weeks, the whole month of July, it's just been in this sideways ugliness. So I don't like it until we break and close above that structure for retracement to a newly created demand zone at some point in the future. So that's S&P. Hope that helps. Gold buy or sell. Gold's pretty well neutral as well. I'll get to that in just a second, because I know that's everybody's favorite. As far as the pairs, though, we do have, again, pound dollar at the top of the list. Really like this for a buy. I absolutely like this for a buy, to be honest with you, because we do have a new series of higher highs, higher lows. We've broken all this nonsense structure over here. We had a big green daily candle back on the 15th. And then if we dig a little deeper into it on this 2-hour time frame over here, let me reset my chart and go to a one chart look. Oh, and by the way, the EMAs are in my favor. So 8 is above the 21 on the higher time frame. Trend is good. Trend is my friend. Trend is my friend until the bend at the end. We had a 2-hour demand zone. I know I pointed this out last week, but it bears repeating because we had a big spike up. It broke all these structures over here to the left that I pointed out on the daily. And now I just need to see the manipulation game start to happen. So I drew this projection line up last week on, Friday. I guess it was on Friday. That I want to see price come towards the zone, but kind of slow down and start basing out. If we get a base, guys, we just got I got to start to see some liquidity grabs going on. So this is really what I want to see. Base, push up to take liquidity above that base, push down to take liquidity underneath the base, and then, oh, by the way, just bounce in or spring in, because that's the last point of return on Wyckoff, spring into the demand zone where the unfilled order potential lies, based off of the inclining volume that I pointed out last week. And that's where I personally would want to be buying. So that's what I drew up last week. Now, we may be getting that now. So we got a little bit of base here. We got liquidity push up. And at this point, just so I update this for you guys, now all I need to see is just a break below here, take this liquidity out underneath, and then just spring in. The 200 EMA is right there. Give me that bounce for possible buy. So as always, guys, not financial advice, just showing you what I'm looking at. Definitely do your own due diligence on this stuff. But I like the way the manipulation game is starting to happen. I'm glad that it did not just dive straight down like this. Because if it would have done that, it would have probably been too hot and heavy. And it would have probably just pierced right through the zone quicker. So I like this gradual slowing down effect. Now I need to see the manipulation start to happen. And then if I get into a buy, which, by the way, it's only a 20 pip range of a demand zone. So that is a little bit narrow for my taste. It's pretty close. But I would probably just give it a little bit more breathing room on the stop loss side down here. Okay, rather than choking it out, maybe give it a little bit more wiggle room because the range is so narrow. We already bounced. This is the benefit we have, or the benefit I see anyway, of buying in this area is the fact that we already bounced into a 4-hour demand zone with liquidity back in the past, and we got a lift off. We got to push up. So I'm buying in context of seeing that we've already bounced off a demand zone that clearly had some strength in it. So now I just look for a newly created zone, and it just so happens to be on that 2-hour time frame right here. So that's going to be what I'm looking at, probably 1A, 1B with Kiwi dollar this week, based off of that. As far as Kiwi dollar, well, we know the Kiwi's at the top of the list up here now when it comes to the data. So that's our strongest currency, fundamentally speaking. The dollar, again, down here with Aussie in the basement. So I like that. I also like, obviously, Edgefinders giving it a bullish rating, giving it a very bullish +7. Okay. Trend is good. Seasonality is good for the month of July. Now, we do have, 10, 11 days left in this month. Not so much help on the COT report, unfortunately. So that's a downer. But Kiwi dollar is bearish from a contrarian point, or it's bearish from the retail traders. So contrarian signal says buy. And then you got some consumer strength data, a little bit of inflation data helping out this cause as well. A couple little hiccups on the jobs data, but overall, it's looking pretty good. It's a pretty good score. So going back over here to the Kiwi dollar chart, which I think's kind of similar, pretty well similar to what I was looking at on the pound dollar. Go to the daily over here. We do have our EMAs turning around now. Very similar to the S&P that you asked me about. I want to see it break a structure as well, because we do have the remnants of a daily supply, which was mitigated. But within that daily, we had a 4-hour. Or no, I think it was a 2-hour, actually. Let's go double check here. Yeah, 2-hour. So inside of that daily that was already mitigated, we have a 2-hour zone. Liquidity started picking up. The volume you can see down here, especially on that red candle, that was a big spike down. So I want to be aware of that. I don't want to buy right in front of that. because I don't want to run the risk that 2-hour supply, the unfilled orders there, which had a big strong drop. I don't want to run the risk that might take my unrealized gains and take them away from me. So that's why I say, just straight out of the gate from the outset, I got to see a break of structure. If we break that structure, then that shows me we got some underlying strength somewhere in this up move. With a very bullish score, I don't know that I have to necessarily wait to get to the bottom. Let's just go find the nearest zone. And then this zone right here, I think looks pretty good. Talking about this one right here on a 4-hour. Because you got a base, you got a big move, okay? The volume could have been better on that leg out. I'm not going to absolutely lie about that. I'm a little disappointed to see that. We just had a dinky little green candle right here on that strong leg out. So that could present a problem. But a lot of problems can get masked if we could just break a structure and close first and then trace. So that's kind of the picture I'm looking at for Kiwi dollar. Again, based off that 4-hour demand down here, guys. You asked about gold. You go double check the chat over here. Let USA burn. Go. Yeah, we're not making a whole lot of friends, are we? When war will end, when sign a document and that ink dries. That's my opinion, Rocket. I could be wrong, but until we see a document with dry ink on it from both sides, shaking hands, kissing and making up after they're cussing and discussing, I don't think the war ends. Besides market fluctuations, war should end. It's sad to see people suffer. It is. There's reasons to, and there's reasons not to do it. So yeah, you can't please everybody. It makes sense why they're doing what they're doing, but yeah, it's guys, war is hell, right? It sucks. And there's always something like that. There's always a fiasco somewhere throughout the world. It just sucks when it gets brought to the main stage like this. Hope they end this war permanently ASAP. Absolutely. Volume analysis, is this a custom indicator? No, that's volume spread analysis. So guys, you guys know this, or most of you probably know this, but in currency trading, we don't have centralized volume like we do on the stocks. So we have to get creative with understanding, hey, was that move, did effort match result? Was that a false move, or was that a move backed with some actual strength? So volume spread analysis is kind of my way around. If you go to indicators on your trading view, you just type in volume or VSA or volume spread analysis by this developer, Hari Prasad. And just click on that. And then in fact, right here, there's a little document, and it'll tell you it'll help you understand the reasoning behind it. What's low volume? What's average volume? What's above average volume? What's ultra high volume? Okay. Really good kind of way to, I don't want to say skirt the system. It's just kind of a way to read the trading activity or the tick volume within a candle to understand if the institutions, the smart money are stepping into the market or if they're not. So that's why I say whenever I have a leg out on a demand zone or a supply zone, I prefer that this leg out candle gives me at least a yellow bar, but obviously preferably a red bar like we have back here. Right? Ultra high volume red bars. That's the best. That is absolutely the best. But I will get into a trade on a yellow bar and I'll be fine with it. Unless it's like the pound dollar, like I just showed, that's given me inclining volume with the leg out. Even though it doesn't have a yellow bar, it does have inclining volume. Inclining volume as prices as rising. So again, I say volume, but it's just a habit, but it's technically volume spread analysis. It's technically tick volume, trade activity, transactions per bar. So anyway, that's that. And then, yeah, gold. So let's go to gold for you guys. As far as the edge finder over here, I do believe we're still getting a +1, I think, or a neutral something. Yeah, +1. So a little bit of fundamental strength because the data has those 6 new red boxes that we just saw. What's negative for the dollar in data a lot of times is good for gold. So we're starting to get a few points of eco strength for gold. Not so much on the sentiment. And then technicals still giving us a -1. So let's go look at the chart over here and find out why. Find out why. As always, guys, daily on the right to start with. I got to see where my trend is. I got to see where my highs and lows series is. And so far, it's still lower lows, lower highs. So yeah, the data has started to favor favor gold. It has completely turned to 180 because we did have bearish scoring on gold at the start of the month. But then when that data started on July the 1st, the negative ADP number, the negative manufacturing PMI number, that was a double whammy on day one of the month for the dollar. So that's really the first day that was the first day of the turnaround for the data to favor gold. But it's just like a big oil tanker. It takes a long time to turn that thing around. So the way I'm playing it's going to remain the same until we start breaking some of these supply zones and closing like I drew up last week. Close just like this is the same picture I drew up on was it the S&P just a minute ago. If you break a structure, that's half my question answered, because I have to start seeing a series of higher highs and higher lows on the daily. So if we get a break of structure or a change of character, technical term, well, then I can start looking for a discount at that point, because I don't want to buy up here. That's a big push. Breakout buyers are starting to join the market, and we know that, and the smart money knows that, and then their stop losses are going to be down here somewhere. So that's the picture I want to see. I have no clue where to draw this line yet, because we haven't had a demand zone create itself yet. So I just feel like this is too congestiony. Yes, it is in the context of a downtrend still, because we are still making lower lows, lower highs. We made a double bottom, but when it comes to the highs, it's still lower. Okay. So yeah, sitting on my hands on gold and silver for that matter until I get this green box kind of do its thing. Let's break some structures over here. Here's your 4-hour look, because the last zone we touched was that 4-hour confluence, daily 4-hour confluence over here. Right about the time the data was starting to move bullish. And so again, we caught unfilled orders, and what happened? Price plummets, bounced into demand down here. So it's just too congestiony for my taste until we break and close above this structure. So hope that helps on that, guys. Let me double check over here. Europe heat waves crazy. Or yeah. Well, it's going to be 95 Fahrenheit here where I live in Kansas City today. And tomorrow's supposed to be 99, but I guarantee it touches triple digits. So that's what, 36, 37 Celsius for you guys across the pond. Yeah. We have officially entered the hottest period of our spot. And I just watched a video last night, guys, in the U.S., just looking at the topography of the U.S. and the climate, the monsoon seasons, this and that. It's kind of weird how the hottest part of the season is different periods of the summer, depending on where you're at. So like the desert of California, New Mexico, Arizona, their hottest period of the summer is actually the end of June. And then as you start going eastward, that's where it starts to go later into the summer. So like, I think for me here in Kansas City, it said July 21st through August 2nd is our hottest mean temperature of the year. And then you start getting into September, Washington State, Oregon, California along the coast, that's their hottest part of the year. So it's just kind of weird how that is. But yeah, it's sweltering, it's suffocating, and we have humidity here in Kansas. So it's going to be 100. You might as well say it's 110. Gets pretty hot here. Anyway, so oil, I wanted to touch on that as well. Remember, we did bounce into those zones, whether we're looking at WTI or Brent. We bounced into that daily demand all the way down here. We're still getting that push up. We are getting close to that daily supply, daily and 4-hour confluence for that matter, daily 4-hour. So again, that's really where I would personally reevaluate, but it's not going to shock me at all to see, especially, well, it wouldn't shock me at all to at least get another $7, $8 push per barrel, get up here to that 88 level, 88 to 89 range, revisit that supply zone up here and see what we get from here. Even if it is just a slowdown, guys. I don't know. But obviously, we did get that headline come out this morning. Mediators proposed the 10-day cessation of the strikes, blah, 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 blah. The gentleman right before me went on about this. Yeah, it's annoying, but hey, it just goes to show that even when that data comes out, whether it's true or not, because remember, we always want to get the data and then like cross-reference it, because one side can say something, the other side completely goes against that, says completely the opposite. So anyway, when that when that info came out, you saw a risk on spike, but it's already been retraced. So we go to oil over here. Let's go back to 1 minute. And I got 2 minutes. My goodness. We obviously on that headline had a big drop, only for it to get sucked right back up. Now we're ahead of that. So just be careful with these headlines is really the lesson to be said from that. They paint these big red boxes. Okay, red means action. It should mean stop. But it's a scary thing to see. The color red, it's psychological. So just be careful with these headlines. And even when they show this, it can be deceiving. Because a lot of this stuff, when, they did get the spike, it just like we see, turns around and gets sucked back up. And now it's higher than where we were at for oil. So that's why I say another $7 or $8 wouldn't shock me at all to see oil. And then once we get up into these zones, that's where I would evaluate it. But I don't have a play on oil. I think we're still pretty well getting bearish or neutral scoring over here on it. Last I looked, U.S. oil, guys, trend is up, obviously, since that daily demand zone bounce. But we're not getting a whole lot of love from the banks, institutions, retail sentiment, that kind of thing. And then absolutely zero on the data. Kind of hideous. It's going to be a slow week. COT report, the Nikkei was the biggest winner. The Dow was the biggest winner among the indices. And then the British pound was the biggest winner among currencies. I should say Dow was the biggest winner among the U.S. indices. So that's going to be your biggest winners over there. The yen, 0.5% gain. Not really. That's negligible in my opinion. That dollar, straight up zeros. Gold, negative 0.72. That's still pretty neutral in my opinion. Bitcoin, pretty neutral. The biggest loser was the Australian dollar, but even that was still higher than minus 2%, which, again, that minus 2 to plus 2%, I just look at it as more neutral. I don't look at it as a good enough reason to actively try to go sell it. But it is nice to see that it is bearish because what is Aussie? Aussie was the weakest currency with the dollar. Okay. So anything up here, go back to my top setups one more time before I get up out of here. Aussie. Let's see here. I was looking for, and surprisingly, Aussie yen, Aussie Swiss, Aussie CAD's on the list, but that's again bullish force. So that's going to be kind of where I'll leave it, guys. Pound dollar for me, Kiwi dollar, basically 1A and 1B as far as I'm concerned, as far as what I'm watching this week. And then lastly, the UK 100, it unfortunately hit a zone. The FTSE did while I was asleep and missed it. So I was looking at this 1 hour. I drew this projection line up last week. It bounced in. It got us our push up, take profits in this area, and now it's retraced. So maybe we'll look at this area down here for a new demand. Yeah, possibly. Might look at this area. And I'll end it on this because I know I'm out of time. I'll keep an eye on this zone for the FTSE. I just wonder if this might be too much of a black hole, too much of an equilibrium, too much of a fair market value to where it might get sucked in. But we got a simple take profit up here. So I am going to see if we bounce into this zone and we get a strong reaction, a bullish engulfing candle, a hammer candle with a big wick underneath, closes near the top of the range. My volume spread analysis starts picking up. Could possibly turn that into a little buy. I would like this. It's a cheaper price anyway than this one up here. As you can see, it's already retraced. So this is old news now that as far as I'm concerned. So I'm just going to color that light green. And we'll leave this one out here. So this is going to be another one I'll watch this week. And see if we get any love because it is still giving us a bullish vibe on the top setups. And we'll just end it there, ladies and gents. Hope you learned something today. Hope you like the new show format. Again, it's good to see that you guys in the Euro areas are getting a little more exposure. We're about the middle part of your sessions over there. So, ladies and gents, that's all I got. Have a wonderful Monday. Stay safe out there, and we'll be back early tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.